first session, learned speaker Vimal Punamia sir is on the way. He will be there any moment in next 5-10 minutes. Uh, Friends, one of the flagship program of Western India Regional Council, Direct Tax Refresher Course, is on. We are here in the first session of the DTRC. Based on the feedback of the members, the entire direct tax team has designed a wonderful course of 4 days, today, tomorrow, and next week again. And the important part is, this topic, after a lot of deliberation and discussion, the current issues which are being faced by the members, we have, taken up those as a topic, be it faceless, be it penalty proceeding, all the topics which you see of all 8 session, 4 days are such which are of day-to-day utility to a general chartered accountant who is into practice of income tax. We have been seeing a lot of changes which are happening. To do the entire relearning of these, we are also coming up with one-day program to be scheduled on 29th or 30th of June, wherein there will be a one-day relearn session. So kindly, take benefit of that also. Please see that also. We will be, hosting either on Saturday or Sunday based on the, the availability of the place at BKC. That will form part of the Direct Tax Committee. I am Ketan Sayya, current chairman of Direct Tax Committee. Once again, welcoming all to the DTRC's course. Before we proceed for the lighting of lamp, we'll just wait for 2 minutes the learned speaker to come and then we'll proceed. May I request the current secretary CA Gautam Lat to give us the highlight of the current year's activity which is done by the Western India Regional Council. Yeah. May I request the backend team to play the ICI motto and request all of you to please rise for the ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्मिमाणः निर्मिमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यति कश्चन एतद्वैता 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 एतद्वैता.
Thank you so much. So may I request the Honorable Secretary of Western India Regional Council, Gautam Lat, to brief us about the activities of the region which are being undertaken by the current team. Over to you, Gautam.
Thank you, Ketan bhai. Hello everyone, good afternoon. Yeah, the energy is high for DTRC. Let me start by first complimenting, the man who is sitting beside me, Ketan Sayya, for this wonderful structure and all the efforts he has taken for, this successful DTRC. And one thing, as you noticed, we are blessed to have, chairman is not today, but we are blessed to have such a dynamic chairman this year. He called me at 1:55 and he said that, Gautam, chahe ek bhi banda hoga na, we should start sharp 2 o'clock. This is the dedication, even if we do not have speaker because of Mumbai rains, but we thought, let us start the session because the time of chartered accountants are very precious and This is the energy, dedication, and I would say discipline this year which we brought into the council. Thank you so much, Ketan bhai, Shweta madam, Ruddesh bhai, Arpit Kabra, and my council colleague Murtaja bhai for such a wonderful work which you are doing this year. And I am sure the council will, WIRC will do, and we take to the greater heights. Obviously, with the blessings and guidance of our central council members today, we have Piyush bhai charged under this committee. He always guided us. Thank you, sir. Thank you so much for always being available and supported us. Couple of things I would like to share, friends, with you. So one initiative I would like to talk about, and then one request I have to make to all of you. See, CA, as we see, all of us are proud of these two letters. I can see many experienced faces together. All of us, whatever today we are earning, whatever you are today, whatever I am today, and whatever we all of us are today because of these two letters CA. So, whatever this legacy our forefathers have created, the responsibility is on our shoulder to take it to the greater heights and at least protect the dignity of this profession. I'll tell you what we are doing at WIRC, and then, I have couple of requests to make. So recently, we keep hearing that, CA has done this CA has done this. There's a lot of negativity there sometimes in social media on the mind of, the perception of bureaucrats, the perception of stakeholders. So what we decided this year, let us engage with the stakeholders and establish ICAI as a knowledge partner. I am today proudly standing before you, and let me tell you that we have trained more than 1,500 GST officers in ICAI building. We have trained EOW officers, SFIO officers, RBI officers. Today morning we are doing one program with DGFT where we are, training them about export procedures and the issues which are our stakeholders as a client and as a CA we are facing. Today that program is going on BKC building. So you name any stakeholder, we have tried to establish ICAI as a knowledge partner. We are supporting them in their publication, we are distributing our publications, and we are training their officers so they know that there is an institute, there is a ICAI who knows something, and they are truly acting as a partner in nation building, as a knowledge partner. This is what we have done, and I am sure this type of initiatives will change the perception of bureaucrats, will change the perceptions of regulators. One request which I have to make from you, see, sometimes we see ki ye CNA wo kiya, and we tend to forward on WhatsApp, we tend to put up on social media or on LinkedIn or Twitter. The idea is that I am not saying that we need to defend a particular CA. My only humble request is, see, there are certain aspects in profession, कहीं ना कहीं कुछ गलतियां किसी से होती है. We have proper mechanism, disciplinary committee है, सब कुछ है. You can write if you have any grievances. But by defaming a CA in a social media that एक CA ने ये किया, एक CA ने वो किया, ultimately we are putting disrepute to our profession. I am not asking to defend the culprit. What I am asking is that let us refrain forwarding negative news in social media. Let us try to highlight the objectives and the achievements of what our chartered accountants are doing good for the society. That's one request as a secretary I thought I'll make to you. Few initiatives I would like to highlight. On 22nd and 23rd of August, we are having big regional conferences. The first time ever we have booked GEO. I don't know, any of you have attended WACAO, World Congress of Accountants? Yeah, only couple of you. So, sir, the scale and the magnitude at what, we are doing. We have booked 1 lakh square feet, and you imagine a faculty, we are bringing the faculties from across India, the best of the best faculties. We are hopeful that 5,000 chartered accountants will attend that event. So I request everyone to, whoever has not enrolled yet, I request everyone to kindly enroll for that. It will be a great platform to learn and to network with the fellow chartered accountants. So Vimal sir is here. I request a big round of applause for him. Vimal sir, I request you to kindly join us on the dais. Please. Sorry, sir, with the paucity of time, we thought we'll start with inaugural without you. So, we welcome you, sir. So, it's a big mega event, and it's a great opportunity for learning as well as networking. So, I request everyone to kindly enroll for that. One or two more initiatives I would like to talk about. One is that, we have started with Project Pathfinder. See, we do a career counseling before chartered accountancy. We do career counseling of commerce students so they can, enroll for CA. What we have decided this year that whoever has given the exam and the young chartered accountant, let us do career counseling for them, that what kind of opportunity exists in direct tax, what kind of opportunity exists in GST, what kind of opportunity exists in forensic or the newer areas. So we have curated specific sessions for younger chartered accountants to give them guidance that what kind of opportunities are there and what kind of skill set is required. So this is one another initiative. The second initiative is that Project Panch Tattva. What we are doing that on every week we are focusing, so it is a basic, back to basics. We are focusing on certain technical aspects. Like every Tuesday, I don't know if any of you have seen or not, every Tuesday we are keeping sessions on Ind AS and essay. So that's how the 5 days of week we are keeping virtual sessions, 5 to 7 on specific technical points. So whoever want to refresh themselves or who want to learn, they can join the virtual session. So these are the few initiatives. I am sure the way the conference is designed, this DTRC is designed, every one of you will take a great learning home and also make new friends and, do some networking around here. My best wishes to you. Thank you so much. Thank you, Ketan Bhai.
Thank you, Gautam. I think a great team in place in this year in WIRC. We have today a national conference at Aurangabad and 3 of the office bearers, including Chairman Ankit Rathi, Treasurer Pinky Kedia, the Vice Chairperson Rahul Ji from Baroda. All of them are at Aurangabad, and here it is being led by Gautam. So really, great teamwork, Gautam, and entire team of the office bearer. Since the guest speaker for the day has arrived, let me request all to join for the lighting of lamp, and I'll request the all RCM past chairman, immediate past chairman Arpit Bhai, Shweta madam, and Rudesh Bhai also to join.
शुभ्रवस्त्रावृता या वीणावरदण्डमण्डितकरा या श्वेतपद्मासना या ब्रह्माच्युतशङ्करप्रभृतिभिः देवैः सदा वन्दिता सा मां पातु सरस्वती भगवती निःशेषजाड्यापहा शुक्लां ब्रह्मविचा
Direct Tax Committee of Western India Regional Council is functioning under the guidance of Direct Tax Committee of ICAI, and we are fortunate to have this time the Central Council member from Mumbai, Piyush Ji Chhajed, as a Direct Tax Committee chairman, and he has been always a guide and a mentor to me in this journey of heading Direct Tax Committee here. Piyush Bhai, really thankful for all your valuable input. In fact, the structure which you see, the kind of other activities where everywhere we have a lot of input from Piyush Bhai. This DTRC structure, if you see specifically, 2 topics which we added. One was, the international tax planning in the GIFT City were from the perspective of the future opportunities which are available. The today's second talk on the succession planning is again one such topic that if we see world across, there have been, taxation on succession, and the time or the days are not far. We may see in India also a tax on, the asset getting acquired into succession. So to understand the implication of this or what kind of, planning is being done at the HNI level, we have, the second top. Also specifically for HNI, we also, kept one topic. Today we have been seeing that the routine returns are being filed through all those website and everything, and more so we will be catering to those people where we can do some value addition and where we can, have a justification or a satisfaction of kind of services which we provide. So if you see the well-balanced structure was kept in mind with a current issues like 43 BH, 56, the international tax, gift city. These are all, the topic which are well thought, and there we have, a guidance and input from our mentor and the chairman at the Direct Tax Committee, Piyush Bhai. Piyush Bhai, really thankful to you for all your, support throughout the year. Let me request Piyush Chhajed for his address on this opening of DTRC.
Thank you very much, Ketan bhai. A very good afternoon to all of you. Guest speaker for the day, C. Vimal Punmiya ji, Secretary Gautam Lat, Ketan Sayya, Chairman of the Direct Tax Committee, past Chairman of WIRC, Murtuza ji. I can see immediate past Chairman Advait Kabra ji and Regional Council members, Shweta ji, Rudesh ji, seniors in the profession, esteemed members of this Institute of Chartered Accountants of India, ladies and gentlemen. Once again, a very good afternoon. It's my pleasure to be here on this one of the flagship program, which is of Direct Tax Refresher course, which is hosted by WIC every year. And I know whenever this program has been launched, the registration takes place. It's one of the quickest registration which takes place. And this is a program where the WIC chairman really does not have to do much follow-up also. And that is the sanctity of this program is. Coming to as what Ketan bhai was saying and being a chairman of Direct Tax Committee at the Central Council, I thought I'll just take this opportunity to appraise you on what would be coming in next 2-3 months. And last 2 months which we are working upon, which every member would be also waiting, and we keep on getting requests. Predominantly, it is appreciated at the council level also that even today, 80% of practicing chartered accountants are predominantly into a tax practice, and direct tax remains a core area even today, even after being indirect tax, auditing and assurance areas. But direct tax remains quite impressive. This year, 2 or 3 important things which I would be coming, which we are already working upon. One, of course, I'll start from a reverse, which was mentioned by the Ketan bhai, is the implementation guide on revision of Form 3CD. The members are aware that the Form 3CD has been revised in month of March 2024, wherein the most important revision which has come is on the responsibility of auditor to now report on disallowances under 43B subclause H, which has been discussed at large. I'm sure Gautam Naik, who will be speaking tomorrow in fact, he will be speaking tomorrow on that topic. Gautam Naik was in fact part of the member of this implementation guide which institute will be coming. This implementation guide is covering complete revision in Form 3CD. It would be guiding the members that how to address the issues and challenges which are faced in this regard. Gautam Naik, who is speaking tomorrow, he was a member of that particular group. Implementation guide has been drafted. I'm sure most of the members would have received the draft copy for their comments also. Generally, we do not expose the draft and it's an implementation guide because it is a non-mandatory publication. It's a recommendatory in nature. But this time we decided, considering the importance of the topic, each and every individual members, the topic, the implementation guide has been circulated. If any member has suggestions, I think so it's open up till 18th. You would have received an email. If you have not received an email by any particular chance or you have missed it, that draft copy is there on the website on DTC page of ICAI. If you have any recommendations or suggestions thereon, which should be introduced in the implementation guide, please do write to us. Do write at dtc@icai.in. Each and every suggestions will be discussed, tried to be incorporated in the implementation guide, which will help and benefit the membership at the large. Apart from that, another important thing which is on implementation guide, which was issued last year on Form 10B and 10BB. This year we have decided to convert that into a guidance note. Now, what is difference between implementation guide or a technical guide and guidance note? You may be aware that whatever publications are issued by the ICAI, has certain authority attached to it, like accounting standards, auditing standards, which are mandatory in nature. Similarly, guidance notes are, though it is stated that they are recommendatory, but they are mandatory in a sense. If you are not complying with the guidance note, you have to actually document what are the alternate audit procedures you have followed while discharging your assurance functions. And that's why I always request my members that whenever you are performing your duty or discharging your assurance function, please comply with guidance note. There may be an issue. You may feel that what is given in the guidance note is right or wrong. There may be difference of view, because when the matter comes on taxation, there are always two debatable views possible. But if a particular view has been taken in the guidance, so just take an example of a turnover, which is not defined under the Income Tax Act, but stated how the turnover has to be calculated in case of futures and options, in case of share trading transactions, that has been upheld by the Delhi High Court, stating that if turnover is not defined in Income Tax Act, what is stated in guidance note, prepared by body of experts, that is ICI, it should be binding, and assessing officer cannot make any adjustment. So what I'm trying to say is guidance note is a higher pedestal. Once this guidance note exposure draft was already released, 28th May was the last date. We have received total 87 comments to it from the various stakeholders. Those have been incorporated. Council meeting is going to happen on 2nd and 3rd July. If it gets approved, it would be amongst the public. Whenever now you are doing an audit for your charitable trust, my request to you, please comply with that. Even if you have a difference of opinion stating that no, so I know there are a lot of reporting issues when it comes to 10B and 10BB. You may have a difference of opinion. But as I requested, being a mandatory, it will allow, you are actually ring fencing your discharging assurance function. So please do follow. It is always said in accounting and auditing, whether the guidance note which is written, you may feel it's a right or wrong, but it is final when it comes to audit. Whatever publication issued by ICI is final. Third very important aspect, we had come out with a form in regard to revision in the tax audit, which can be carried out by an individual chartered accountant. Currently, that limit is fixed by 60. As you know, there was a certain dispute was raised by certain members of the institute stating on whether the institute can issue such guidelines restricting number of tax audits which can be carried by your chartered accountants. Of course, dispute was in regard to litigation was raised, questions were raised that whether constitutionally a right to practice can be put on a restriction. Obviously, Supreme Court has upheld the powers of ICI that they can put a reasonable restrictions with a direction stating that because the limits of 60 was put in 2014, which is 10 years, and since because then there is a lot of technology advancement, whether this limits should be reviewed. So to take a public survey, we had come with a form. We received 4,087 suggestions on that, which will be considered by the DTC Committee of Council on 20th of this month. This is 20th June. And once it is approved that whether there is a revision or no changes happening, it will go to council again on 2nd and 3rd July. If any change happens, it will come into the public and a notification will be issued by ICI. Fourth, very important, once again, for which a mail has been sent today to each and every members, a committee has been formed by Ministry of Finance, which is headed by Joint Secretary Revenue. Most importantly, keeping the budget in mind, which is scheduled on third week of July, most probably maybe 22nd July, if I'm not wrong, that what should be the changes in taxation policy be done for bringing in ease of doing business. So there was a first meeting held, which was attended by me as a representative, as being a part of a chairman of Direct Tax Committee. And there was a 50-point questionnaire been drawn that what is the time taken for filing a tax return? What is an effective tax rate? Whether the systems are an issue. So we thought at the committee level of DTC that let us take an opinion from the members. Rather than being decided by a certain selected people or a certain selected group, let us have a general opinion. And especially when we are generally getting a survey responses which extends from 4,000 to 5,000, we thought it would be more appropriate. So similar questionnaire has been sent today, which will be around 8 to 10 important questions, which was designed by that group, which was formed under Ministry of Finance. My request to the members, if you can actually give your response, it will help me. It's a questions like a very simple question, like how much time has actually been taken in filing a return, though it is an auto-populated or it is coming through a software or through an air information. This is just to move. An idea behind is that whether taxation policies or taxation changes in the administration can help in taking India's level in improving and ease of doing business. So that's an idea. So again, my request to each and every members, please do send to us if you have any response on that. It would be appreciated. I would be glad to take it forward. and consolidate and then present a report to the Ministry of Finance from an institute's perspective. Coming on budget, we have submitted this year pre-budget memorandum containing 99 suggestions. The first suggestion was made in 24th April itself, and follow-up suggestions and justification was sought by CBDT chairman. There was a personal meeting where we did a 90 minutes presentation on this 99 amendments which were sought, including, for an example, reduction in tax rate as far as 115 BB is concerned, 60% to 30% for dimming income, which was brought for a specific demonetization purpose. So they have agreed to those suggestions, and we have also now given a supplementary pre-budget memorandum to them. I believe it would be considered before that. Apart from that, what we are doing is we are doing a weekly representations from a CBDT to a CBDT, which they are actually effecting to it, looking to it, and they have also agreed that, for an example, in quarterly, if you are making a 12 representations, what is the status of those representations? Whether they have exceeded and they have dealt with it. If the amendments have been made, you will receive that. If they are not agreeing to it, what was the reason for that? So we have decided that on every quarter end, so for an example, June end, there would be a discussion on whatever representations have been made by ICI, how they have been dealt with. And I think so that will serve more important purposes than whatever suggestions we are making, whether it is accepted or not. So I thought I'll just take this few minutes to give you a background on this, considering a direct tax committee program. I'm sure the next lecture, which is going to be addressed by Vimal Punmiya, I am very much benefited by Vimalji. I see him every day in tribunal, and the way he argues and put forth his argument, I'm sure we all will be benefited, especially when he's covering, I think so, faceless assessment and appeals. Assessment is true, but when I'm sure when you are addressing on appeals, it would benefit your members a lot. So thank you very much once again. Thank you.
Thank you, Piyush Bhai, for a detailed elaboration about what a direct tax committee at ICI is, working for its member. Thank you so much. Members who are standing, please bear with us for 2 minutes. We are putting up the chairs here, and some of the members have kept their bags on the seats. May I request them to remove the bags so people are getting confused. So please keep your bags down and just bear with us for 5 minutes. We will be arranging some additional chair in the front row. A brief background that we had a speaker in form of Girish Ahuja sir, and just 3 days back we received some practical difficulties being faced by Girish Ahuja sir. I saw sir was talking on the same topic in another branch of ICI, so we just took that benefit of that and requested sir, and it kind of commitment he has, I really salute him. Sir, we are really grateful to you. Just 2 days back we approached. On the same call, sir said, no problem, I will come here. And this practical difficulty which we had, otherwise we were thinking of rescheduling this entire day's program or a half of the session on some other day. But thanks to sir, this difficulty is solved. And let me assure you that we have this year in July budget, we are trying and seeking Girish Ahuja sir for talking on some or other topic during this session of direct tax. So we will have even Girish Ahuja sir talking to all of you. And I'm sure with the kind of experience which Vimal Punmiya sir is having, none of us will feel absence of Girish Ahuja sir. Sir is again a kind of a versatile speaker he is. Let me request the current secretary, CA Gautam Lat, to formally introduce Vimal Punmiya sir and also, acknowledge, in fact, Gautam approached him. I'll request Gautam to, introduce Vimal Punmiya sir.
Thank you, Ketan Bhai. Though Vimalji doesn't need an introduction in a direct tax forum, but as a tradition, we have to introduce our faculties. So CA, let me present before you CA Vimal Punmiya. He's a chartered accountant, LLB and BCom, a chartered accountant throughout a ranker and into practice since last 50 years. He advised more than 1,000 clients since now. He has authored many books on stamp duty, registration, capital gain, search and seizure, HUF, family arrangements, appeals. He is a regular feature in various newspapers, Times of India, Property Times, Accommodation Times, and many more newspapers. He has also been to USA as a legal advisor to exhibitions on Indian property 1997 and associated with many organizations, namely life member of CCI, Cricket Club of India, also a member of standing committee of TDS appointed by Income Tax Department. So guys, let's welcome our today's speaker with a big round of applause. So now I request Piyush Bhai, Murtuza Bhai and Ketan Bhai to kindly present welcome bouquet and memento to our faculty.
May I request Vimal Punomiya sir to take over?
वो लगा सकते तो लगा लो, लेकिन किसको दबाने का मेरे को आइडिया नहीं है. आगे करना है तो किसको दबाने का? बराबर यहाँ पे नेक्स्ट पेज में आना है तो ओके, ठीक है. ये आगे ऊपर का, ये नीचे का, ठीक है. बस यही है ना. 21 पेज है, 21 पेज है टोटल, 21 पेज है टोटल. अच्छा 21 पेज है तो जाएगा आगे चलता रहेगा. बस ठीक है, ठीक. फ्रेंड्स, गुड आफ्टरनून. चेयरमैन Ankit Rathi in absentia because you're busy in Aurangabad. Piyush ji Chajed, my friend. Gautam ji Lat, Murtaj bhai Kachwala, Ketan ji Sarvaiya, Arpit bhai Kavra, Sweta Jain, and Udesh Pankharia, and friends. Next 1 hour, we are going to talk about faceless assessment and faceless appeal. Basically, as we already seen last 3 years, so theoretical part we all know, but I will have to point out theoretical also, but I will tell you little practical aspect. How to represent there, how to prepare for the appeal, whether it is faceless or face-to-face in tribunal. So on that area I'm going to cover. In short, what I'm going to cover is, I will tell you a few issues, few points. Various stages of test litigation, faceless assessment scheme, procedure for faceless assessment scheme, practical aspect of faceless assessment scheme, representation before AO in search and survey cases, preparation of statement of fact and grounds of appeal, preparation of paper book before CIT appeal and ITAT, submission in faceless appeal, handling appeal before central circle, practical aspect of argument before ITAT, and how to use the judgments. Because of time, I will not take much time. I will go little fast. Now, first of why faceless scheme have come. Normally, before I start the faceless, sometimes we have a feeling, if by making a long, detailed submission, it will solve our problem. If he cannot convince the officer, he will get confused, and in confusion he may allow something. But that is not the right approach. Always try to be as precise as possible. At the same time, you have to cover those issues also. It cannot be that short that other person don't understand anything. So making a submission of 50 pages and 100 pages and including again judgment as part of the submission will not serve the purpose. If you want to rely on something, write one paragraph of that and include as an annexer. Or make a proper, annexer, again there will be complication. For example, I want to include 20 annexer. Now which annexer ends where, nobody will understand. You may file 500 paper book, 500 page submission without proper index, without proper serial number. Simply write annexer A, annexer B, annexer C. Annexer A may run into 30 pages. Your point may be at page number 19, officer will not understand the 19 page till you go through all 30 pages. So it is better enclose annexer, but again make a proper paper book, make full set of that, write all serial number, make a proper index and write serial number, item what is enclosed in the paper book with the page number. This item is on this page, this item is on this page. And that will solve a great problem and submission will reduce. When you make a paper book and you feel the issue is really complicated and many papers are to be enclosed, make two paper book, facts volume separate, legal volume separate. As far as judgments are concerned, make a separate paper book. So only judgment part will be there. Enclose Supreme Court judgment first, jurisdiction High Court then second, other High Court third, jurisdiction tribunal fourth, other tribunal five. And then whatever circular and notification you want to rely, you enclose in the last. But make a proper index, that is very, very important. Normally what we do many times, is a officer, if he file this paper, he is going to raise 1,000 questions. So better not to file at all. We'll see in appeal. Appeal may file karega. But that is also not solved. Face to face, it was okay. Always we used to say, officer, I filed the paper, but he is not in the file, must have misplaced it. But now it is not possible to say that, because everything is on record. Even your video conference is also recorded properly, and always you can take the copy from the department. So that all old system what we are following, that also will not serve the purpose. So better to file, avoiding, it will not solve any problem, that will create more and more problem. Again, if you avoid something, CIT will not admit those evidences later on. Tribunal may not admit those evidences later on. So it is better to file everything at first stage and try to explain him everything, whatever you want to explain. Submitting detail in the end. Normally we say, chalne do abhi to December last date aayega, or March last date hai. We don't file all the paper. And on 25th of December, when 31st December is the last date, we file 300 pages with the officer. He cannot go through it. He will ignore that. And then you go to the CIT appeal, go to the tribunal. Tribunal again will set aside back to the ITO, and procedure matter will not end for another 5-10 years. So better to file well in time. Many times it happens, for example, the case of the loan. And somebody has given me loan and that party made a statement, I do only Hawala transaction. I give check and take the cash back. And now that is all department is relying on their statement. So our first question will be, I want to cross-examine that person. When he is given me the case, what are the evidences? From where he got? I will say, I have simply taken a check, I paid interest to him, filed confirmation, taken in my record, and he paid back the loan. And TDS has been deducted, he claimed the TDS. So in that situation, if I want to cross-examine something, I must start at first stage only. Don't avoid a later stage. I will do before the CIT appeal, because CIT appeal will not allow. He may say, why you not ask the assisting officer? So it is always better to take all the stages at first stage only. Normally, many times it happens, if you cooperate with the officer, he is going to make addition, better not to cooperate. This reminds me, in my early stage, I wanted to avoid a particular officer, because my case was really complicated. And now, he used to issue notice. I will go, quietly ask the peon, Saab hai? He say, haan hai. Then I will not appear before him, I will go away. वो बोलेगा नहीं है, immediately I will go inside and keep my visiting card. So when he calls me, Punmi, I आपको 10 बार notice भेजा, you are not come. I say, come sir, you were not there. Every time I left the card. So no such practice will serve. Now it is a faceless. So those things are over. If we want to rely on certain court decision, normally what happens, for example, bogus purchase case is there, or loan case is there, or gross profit case is there, penalty is there, and you after searching, you will find half a dozen order in your favor. And sometimes we feel, oh, abhi to judgment mil gaya Bombay High Court ka, I simply file the judgment and nothing. Friends, judgment will come subsequently. First, we have to go through the facts of the case. Facts of that case and facts of my case may be 100% same. But even then, I have to point out what are my facts. And then I rely on the judgment and point out a particular paragraph of the judgment, sir, that point, 100% tally with my point. And then accordingly, we can proceed further. Of course, you can't avoid assessment. It is said that once person is born, death is certain. Once we have income, tax is certain. You can't avoid that. So we have to go along with this flight. And now, luckily, the face tests have come actually because of Modi ji. It is maybe of Modi ji. Because, 2014 he came. And why he came? My father was Kattar Congressy. But I have given vote to Mr. Modi in 2014 because I thought, what is going on in country? So much corruption everywhere. No officer is working without the money. So when Modi ji came, he thought how to remove corruption and he started working. But as far as government department is concerned, when he was talking about corruption, it was going up and up and up, increasing day by day. Of course, income tax was less corrupt than due to other department. But income tax problem is that 8 crore SSCs are there in income tax. Other places, wherever somebody commits some offense, then only those person go there. So they have few thousand, maybe few lakh. So income tax is more popular. And little corruption also create lot of publicity. And many times department officer may not be corrupt, but there are many other things which we need not discuss here. So corruption goes on. And Modi ji said, one officer will ask the money. When client or CA go to him, then only question of money will come. So let's disconnect their contact. So now we don't have to go to the department. If you go to Ayakar Bhavan, you will find nobody is there. In past when you used to go to Ayakar Bhavan, there was hardly place to sit on the chair. So much pressure was there, particularly in the month of March or February. So faceless, and many persons said in 2014 कि भाई मोदी जी आने वाला नहीं है, ये वापस faceless में चालू हो जाएगा, face to face. अभी मोदी जी आ भी गए हैं, so it will remain there. Faceless will no go away, so we have to stay with this only. Now, and government have put full faith in us. In this way, earlier 5% cases were selected under scrutiny, 2 to 5% depending upon charge. Now they select only 0.25%. Out of 400, one case is selected. So only 2 lakh cases all over India are selected under scrutiny. Of course, 30,000 other cases are selected because of reopening under 148 or 263 or whatever other things. But as far as scrutiny is concerned, and I remember out of these 2 lakh also, 50-60% must be for the limited scrutiny. Detailed scrutiny, when very few thousand cases are there. As compared to when, if you go back in 1975, where 100% scrutiny was there. If your income is 5,000 or 5 lakh or 50 lakh, 100% scrutiny, so at least that is not there. अभी आगे नहीं आ रहा है. Okay, आगे. So, faceless assessment scheme purpose. What is the object? Partly I told you. Eliminate interference between assessing officer and assessor. Optimize utilization of resources through economic and scale function. Earlier what happened? One officer had 50 cases under scrutiny. Same ward, another officer had 1,000 cases under scrutiny. And again, commissioner had a limited power to transfer cases from one officer to another officer, or maybe one ward to another ward. It was not possible those days. So now, under this new scheme, all cases, I will tell you what is the structure, but now all equal number of cases are distributed to the officer. That also has some problem, which I will tell you. And again, the assessment is team-based assessment. One officer don't have to take decision. If you go to an officer and you are not in good terms with that officer, he will spoil your case. If he is friendly with your officer, he will improve your case. So that all is out now. Face have no value. Everything go on a merit of the case. And particularly young children who recently qualified in last 10-20 years, person of my age will have difficulty in faceless. Because we have to rely on my staff for the purpose of any uploading anything or downloading anything or making submission or various other things. But the young children, they are very fast. When I remember when I was working with DM Son Company in 1986, to take out one judgment, we have to spend 2-3 hours. We have to go through 150 ITR and we find out 2 or 4 judgment. Now I have children, I have asked my daughter or my nephew who is sitting here, I want judgment on this particular point. Within a fraction of a minute, he will give me half a dozen judgment in favor or half a dozen against us. And something in my favor, where a department file appeal before Supreme Court or not, where matter is pending or that reach finality. So you know what is the end of this case. So that is possible because of this electric item, all thing. And this started from faceless assessment from 14/8/2020 to mainly remove the correction. Now everything is faceless. Issue of the lower TDS certificate, assessment, rectification. Now shortly 263 order, that will also become faceless. 148 is already faceless. Decision is 148. We file all objection. Officer, even in the, that person who is the jurisdiction officer, his work is only to transfer up. And decision is taken by the faceless team. So, and again, it is a team-based assessment. Now, team-based assessment in the dynamic jurisdiction. What do you mean by team-based assessment? If, for example, there is one national center, and there are 18 regional center. We don't deal with any other center other than the national center. The regional center go through the papers, and there are 18 chief commissioner who is the head of each regional center. Then, of course, then 2-3 commissioners, then additional commissioner, then DC, AC, all full team is there in each center. And overall in India, the 18 principal chief commissioner of income tax, they are heading that. Now, that department, as per the details furnished to them, or as per the system organized, they have to select certain cases for scrutiny. Without knowing the name of party, without knowing what is their income, and without knowing their addresses. Regional center get return, what return we file, all these 3-4 things is removed and papers are sent to them. And then they select, as per the computer system only, which cases used to be selected under scrutiny. Now, and again, criteria is there 0.25%. Out of 400, one case. Those cases are forwarded to the National Assessment Center. That is only one unit all over India. That unit have 100 assessment unit. So at random, they can send to any other person. They have 4 technical unit. Out of the 100 assessment unit, if need any help of technical, valuation report, judgments, status of the judgment, what is the position of that particular judgment, or they want certain valuation of shares to be done, valuation of properties to be done, valuation of jewelry to be done. So whatever technical help they need, this assessment unit will write to the national center. He cannot directly contact the technical unit. And the national center will forward to the technical unit of another center. From, for example, this particular case is from region 1. The technical unit will be not region 1, it will go to region 4 or 5 or 6 or whatever other region. There will be verification unit. For example, party assessing officer have asked for the number of detail. We have complied with that. National center will send to that officer, assessment unit. That assessment unit want whether PAN number quoted by party is correct or not correct. Whether confirmation file is correct or not correct. Whether they have returned bank account where really transactions completed to the bank or simply they have returned bank instead of cash. If they have any doubt, they will forward to the assessment unit will write to the national unit that I want following thing is to be verified. And after that verification part, that unit will, a national unit will forward to verification unit of some another region, not of the same region. So, and the technical unit or verification unit, after completing their job, they will forward to national center. And national center will again send to the particular assessment unit who is in charge of the assessment. So, there is a complete everything, nobody knows anything who is doing what. So, no question of corruption in these such stages, then everything will be under that only. All officers are masked. Even you ask for the video conference, you can't see their face. Earlier, there was a provision that you have to write to the chief commissioner of that region, or you write to national center, in turn they used to forward to chief commissioner, and chief commissioner gave approval, then only video conferencing was allowed. After Delhi High Court and many High Court have given decision, it is 10-12, that video conferencing cannot be denied. So now, moment you write, for one assessment you can write 10 times, he will give you 10 times video conferencing. And you try to explain them. So video conferencing also, you can't see the name of officer. But I don't know, recently I attended few hearing in March, faceless. That time, video conferencing, I could see the face of officer. So it must be by mistake, he not put the off, or I don't know, they must be. But otherwise, they are not allowed to show their face. Only you will see the number, 14,568. So from there, we can't make out what his number is, 14,568, who is their officer. And from where he is talking. 1 year maybe, your assessment may be in Delhi. Second year may go to Calcutta. Third year assessment may be in Bangalore. So again, one person is also not fixed. Every year, that particular person will do your assessment. So you try to contact him. That is all out now. Contacting, we forget actually, no, not possible at all. Now you have to go only on the merits. Because when corruption was there, many young chartered accountants facing problem that we have started our practice 5 years back. An officer is asking bluntly this much money. I have no courage to tell my client. So now at least that all business is over, and only mind one has to work. You have to apply your mind, and how to draft that I will tell you little later. If matter is really very complicated, that cannot be done in the faceless assessment, then Chief Commissioner has power, write to the Central Board of Direct Taxes. If CBDT give approval, then faceless assessment can be transferred to face. And that will go to the central circle. Otherwise, there is no other bodies working here. Now, 98% cases are faceless, but 2% cases are still face-to-face. Which are two cases? Survey cases, search cases, cases transferred from from faceless to face-to-face, which is hardly 4-5 cases are transferred last year. And where transfer pricing is involved, international taxation, those type of cases are still face-to-face. So international taxation is in Area India building, and central circle in central Aikar Bhavan or the terminal in old new CGO. So these two department is face-to-face. Otherwise, everything is faceless. The whole idea of new scheme is, it is a transparent, accountability of officer is there, and efficiency is there. Even faceless, for example, you get some wrong order. Sometimes they add, I also got 3-4 orders recently. Full balance, credit balance in the bank account has been added. Whatever money deposited, money have come out of the sale. But without allowing any expenditure, then there is a unit called High Pitch Committee, where the CBDT members and chief commissioners are the member, 4-5% sit there. But point there is that they cannot give relief. They can take action against the officer who has passed such order. They will transfer or do whatever they like. But as far as our relief will be, they will write to the faceless CIT appeal, or case of central, then the normal CIT appeal, that you decide this appeal within 30 days, or 15 days, or within a particular timing. And they can give direction to the AO not to start recovery proceeding till this appeal is decided. So that much relief can be given, but whether addition is correct or not correct, that is not in their jurisdiction. Now, so what is the end of this message? We have to file all return proper. Make sure, majority mistake I have seen, even in my office, particular share of profit of partnership is exempted. Instead of putting tick in a particular column, tick was put either in subsequent or earlier. So it will become taxable. And then heavy demand come in crores of rupees. So the return is to be filled very properly, because you don't enclose balance sheet, profits account, nothing, only return go. So that return is to be processed, and computer will, computer if you put garbage in computer, garbage only will come out. If you put good thing will come out. So we have to make very sure our returns go 100% perfectly. Timely compliance is very possible. Earlier तो अपन बोलता बहुत टाइम में यार, दिसंबर लास्ट डेट है, 3 महीना पड़ा है. ऑफिसर को फ़ोन करते थे, सर मैं थोड़ा तबीयत खराब है, 15 दिन बाद आऊँ, चलेगा. He also used to say चलेगा. No letter of adjournment, nothing. But now you have to do compliances very properly. Proper explanation, proper return reply, whatever they want, you to treat as a seriously and comply with that. If you want time, apply for adjournment. Oral adjournment or assumption will not do anything. You have to apply for adjournment, then normally we grant for 15 days. Apply again, another 15 days. And after 2-3 adjournment, they will refuse, and one day you will find that window is closed, assessment will be passed, maybe after 1 month, but window is closed, so you can't upload anything. So we have to go, but problem, only thing, one major thing I can see, I'm from Phalna in Rajasthan. We have no income tax officer in my Phalna. So for purpose of income tax, I have to go to Sumerpur. There is another place. And for appeal purpose, we have to go to the Pali or Jodhpur. Now there, for example, normally turnover of the businessman is 1 crore, 2 crore, 5 crore, 10 crore. So officer has seen that type of turnover. Now suddenly in Bombay, one industry have turnover of 10,000 crore. In faceless, for example, Bombay case go to the officer who is Phalna. Then he will get confused, 10,000, figure count karte rahega, kya hai idhar. So that sometimes some problem may be there, but otherwise faceless is doing very well. Quality of submission is very, very important. I told you beginning, no lengthy submission, no, just write anything will not serve the purpose. Earlier we had habit. 27th December, last March, 27th March, we go to officer, make a paper book of 700 pages, write a submission of 120 pages. So officer also, they have no time. And finally, end of the day, if your friend, by seeing the submission without reading, he will allow it matter. Or no, not making the addition or appeal hoga, allow bhi kar dega. And if he is not convinced, then he may do some wrong thing also. So that will not serve purpose. We have to do timely action and proper action. We have to be very, very truthful. If client has not shown something, you have to accept it's not shown. Because department have all 360-degree information. What property you have purchased, where you are working, what is your salary, what is your interest on security, house property, how many businessmen you are partner, how many proprietary firm you have, which shares you have sold, what dividend you have received, which share you have purchased, all the FDR of the bank, how many times you visited outside India, how many times you sit in India in the plane, how many transactions have taken through credit card, debit card, everything department have. Earlier they had no machinery to verify that. Now they have machinery. So if they ask you something, if you really paid something wrong, accept it. Because tomorrow they will produce that document. And there will be maybe prosecution or penalty or many other things may happen. So if something is wrong, and again that is why department before select under scrutiny, after filing the return also, and many times, before filing the return, they send you information. You have purchased this property, kindly explain the source. You have purchased this car or Mercedes of say 1 crore rupee, or you have purchased the land in that place. So they reminding you, don't forget, we are aware of this, show in your return. Or in case if you don't show, tomorrow we may ask you the question, you have to reply to that. So that way they have all information, so no use of avoiding that. Then keep our majority as a tribunal, now again a matter started coming, which was a matter were all over. So now tribunal, maximum case come, ex-party order passed by faceless CIT appeal. Nobody appeared there. Now, point is that party have given PAN number, that email ID of chartered accountant, and changed the chartered accountant. Earlier she is not interested. They given email ID of the accountant who left the job, working somewhere else. Party himself has changed their email. So email should be updated. Message should be read properly. And portal one has to see every week or maybe once in 15 days whatever new notice have come or not come. Because of this factor, person feel that abhi notice to post mein aaya nahi hai. But abhi beech mein to they used to send on portal, mail and WhatsApp. All three used to come. Or sometimes SMS also used to come. But now in last 2-3 months they are sending only on the portal. So one must be very careful. If portal mein nahi hai, then you can accept. There is no problem. Department is in default. Any notice you receive even on a portal without DIN number, that also can be ignored. Because without this DIN number, notice have no value. It should be identification number is required. Otherwise, you can treat it as a waste paper basket. So we have to be very particular now for all these things. Procedure, partly I told you. Regional center will send to faceless. Faceless will send us a notice of 143.2. We have to file whatever detail they ask, routine detail, within 15 days. Otherwise, you apply for adjournment. And they will, and which type of cases can be selected. If you have not filed a return under 139, you have filed a return under 139. 142, one may return file, not file. 148 notices, return file, not file. And all such cases. But such cases, survey cases, foreign transaction, transfer pricing cases is not faceless. They will go to the regular, the central circle or international taxation. NSE assign, I told you, to the assessment unit, particular allocation will be there. That will be all on dynamic system. It is not that a particular unit is known to the NSE, so they can forward to that officer or Mr. Punmia. Not that way. The system has been, so at random it can go anywhere, and that's a system. Obtaining further information, they will write detail, so that party can contact verification unit, technical unit, and even assuming after order is ready. They made a draft order. Party detail have filed, so proper order have come, or details were not filed, so ex-party order have come. That person will make the draft order, sent to NSE. Now, NSE will see return income is say 5 lakh, assessed income is 50 lakh, so that requires some more verification. If they feel return income is accepted or minor hair addition is there, the order will become final. But if abnormal gap is there, then NSE will send that order to another unit for review. Along with all the files online. Another unit will verify that order. And they feel that this order is correct. Then they will send back to NSE and NSE will upload it. Now, for example, another unit feel that no, some modification is required. Some addition was required, but it is not made addition. Or certain addition is made, but they are not correct. So in that situation, another unit will make a draft order, send to the NSE, NSE will forward to third unit for further verification. And they will say, first order is this, review order is this. Now you decide what is correct. NSE's work is only as a postman. एक का पेपर आएगा दूसरे को फॉरवर्ड करने का, दैट इज ऑल. दे विल नॉट अप्लाई देयर माइंड. वो पोस्टमैन का ही काम है उसका. बट थर्ड यूनिट दे अप्रूव दैट ऑर्डर, then they will send back to NSE and it will be forwarded to the party. Before that, if major additions are there, then draft order also will be sent to the party for their objection. Okay, this is the order we are going to pass, so you have, if found to file anything further submission, you file it. And that second unit, it will go along with that submission. So you get more an opportunity. Before they make an addition, there's plenty of opportunity, but we have to attend to that. We have to file the reply. For example, I cannot file within that time, I can ask for the adjournment. But again, matter have come on 25th, for example. Last date, they said you file reply by 27th. 31st March is the 31st December is the last date. And I apply for the time for 15 days, nobody will give me the time. So we have to apply our mind also, and we have to be after that. So whenever draft order come, you have to assume that this is my final order. And I am appearing now before the CIT appeal. And before CIT appeal, what reply I need? That reply is to be given before the assessing officer only, in the faceless assessing officer. And conducting inquiry, seek technical assistance, I already told you. On receiving request, NSE issue notice to assessee, calling detail, all same for here. Taxpayer can submit response to time. Taxpayer does not respond, the NSE will pass ex parte order. Review unit can concur. I told you all, whatever I told you, the same thing is there. Because I want to give you 2-3 case study also later, last May. NSE deal with another draft assessment order, that also is covered. After assessment is finalized, all case record will go to the jurisdiction assessing officer. LSC is working over. Assessment order with demand, without demand, is over, is over. Then jurisdiction assessing officer, if you want some rectification, some calculation, some credit is not given, there can be 1,000 query. So jurisdiction officer we have to contact. Now today problem is, you go to jurisdiction officer, he say you go to NSE. If you go to the CPC, you go to CPC. We go to CPC, they say paper has been given to jurisdiction officer, you go there. So a lot of confusion is going on, and our institute is also on the job, and we also are, on behalf of All India Business Council, we also presented to the Chief Commissioner, sir, sort out karo. We are not asking for rebate. What tax I paid, I want credit of that only. You are not giving credit and attaching my bank account. That way internally Modi ji is given, when faceless come, they want to make it popular. So recovery proceeding from higher officers have given instruction, we have to be slow. We have to recover. At the same time, we should not take harsh assessment. But once in a while, some, jurisdiction officer may be very high-fi person, because uska sab dukaan band ho gaya hai, so he may feel, very depressed also. So that time they jabarasti attach the bank account and do something. So that of course is going on, but majority cases. Earlier I remember 5 years back, before faceless, when I used to come to office in morning, I used to see half a dozen notices on my table, and everyone was recovery only. Most of them were recovery. Today no recovery notice come. It come on the online, we say appeal is pending, and then he don't bother also. Even yesterday there was a call from some income tax officer. अरे आपका तो 175 करोड़ का डिमांड है. मेरे को साहब वो तो wrong demand है. मेरा तो already earlier year में tribunal given in my favor. Well, I'm not telling you to pay. Don't tell me only appeal is pending or not pending. I said the appeal is pending before CIT appeal, he is not deciding. I have received 10 notices, 10 times I have replied to that. He said only I wanted to know that much only. So they are not after recovery nowadays. Additional joint commissioner of faceless assessment unit will be involved from the beginning to end. End means till assessment is over. We will not know who is that, but officer in faceless also assessment unit, what officer is doing, he will do consultation with additional commissioner or joint commissioner or commissioner, and in need arises, he can go to the regional center also, chief commissioner, and take their view. NSE at any stage can also transfer the record. I told you, a complicated matter with the approval of Central Board of Direct Taxes, case can be transferred. All communication between the NESC and taxpayer are exclusively on an E mode. Video conferencing में also you cannot ask, sir, आपका number मेरे को दे दीजिए, आपका address दे दीजिए, आप कहाँ के हैं, nothing doing, or everything is recorded. So everything will be faceless and E mode only. all internal communication between the assessment unit to technical, assessment to verification, assessment to review or NSE to review, all will be on the e-mode. No paperwork. So government is saving crores and crores of rupees because of paperwork only. Communication to taxpayer delivery by way of, so I told you, they will send on the portal or they will send on the mail and WhatsApp also. But portal is the must. Second, 2, 3 are the options. So party knows if somebody is not seeing the portal, he will see the mail. He is not seeing the mail, at least he see the WhatsApp. He is not seeing the WhatsApp, he will see SMS. So they are all additional. But in month of December or March, when last date is there, they send only on the portal, nothing else. If department, whatever procedure has been prescribed in the law, and if department is not following that particular procedure, then assessment become bad in law, which I will tell you little later. Where AO is not satisfied with submission made and proposed addition while making the assessment, no person hearing, so video conferencing, you can ask, if officer is raising again same and same question again and again by various other letter, then you can assume that your matter he is not understood. Then we can say, give me, the video conferencing will be given, you have all the right to explain. But again, video conferencing, you have to be point to point. You can't take 1 hour for video conferencing. They normally allot 10 minutes, 15 minutes maximum. So you have to make your submission well in advance. What I have to point out, what I have to show him, paper book. So you keep your paper book also handy. And you have to show on the mail. So somebody, if you are not expert, you may senior person more than 60, 70. If they are not expert with computer, request your junior to sit with you. So he can update all computer part and you to explain everything. And normally my experience say, I must have done more than 100 video conferencing, but they are very cooperative and very particular and understands also. Video hearing, if asked by the taxpayer to explain the issue, has to be allowed. Earlier there was optional, I told you, now it is not optional, compulsory. And SSC and authorized representative both can sit on the, it is not like only one person can sit. You can tell your client to sit next to you. Whenever you have some doubt, you can ask him, and accordingly, video conferencing can take place. Tactical aspect of faceless assessment. Notices to be complied in time, very clear. Issue-wise response to be given. For example, he raised 7 questions. You assume that there are 7 different parts. Each question you reply separately. Like what you do in the appeal. Each question we take, why ITO made addition, why CITPL have confirmed, why we say it is to be allowed, what are the facts of that particular case, what are the judgment in support of that case, and then we take second ground. So like that way, you to prepare, so he cannot miss that. Legal submission also to be given. Now, for example, you want to give my assessment order itself is illegal, bad in law. It is reopened under section 148 after it has become time barred. If is selected under scrutiny after 30th of September, which was the last date for selection of scrutiny, this year it is 30 June only. So those questions, there are a number of judgments of Supreme Court and High Court, jurisdiction High Court. Then if such issue is there, you point out that first. So matter end there only, it will not go into litigation. But that normally will appear in the appeal stage. To respond to the so-called notice, draft order seriously and completely, video hearing and approving the video hearing. Like for example, my case is of say bogus purchase. I told you a certain question, this 1 crore purchase is a bogus. Now if I don't reply, he will make addition of 1 crore. Real I am not made 1 crore. I might, actually what happened, I purchased same, I am dealer in a, let us assume metal, iron and steel. I purchased metal through the broker. He got me the quantity, 200 kilogram of certain item. I verified, I've taken a bill. As per due date, within a week, I made the payment by account pay cross check. Money has went. And that purchase also, I entered in my stock record and correspondingly, I sold to outside party. Sometimes whole 200 kilo was sold to one party, or sometimes 50 kilo went to 4 party, or some different quantity. Now question come, ITO said it is bogus. And why he say bogus? Person who issued the bill, he was raided by Sale Tax Department. Sale Tax Department, he put hand up. Okay, sir, I am doing only Hawala business. I am issuing only bill. I don't know what is metal is. Or what is diamond is, what is shares is. I issue only bill. If somebody want bill of the aeroplane, I will give. If somebody want bill of the calculator, I will give that also. So his business is like that. Now in my case, I have entered everything. So you to put everything on the record. Sir, I have purchased the goods. I have paid for it by account pay cross check. My bank statement reflect the payment. I have a bill and a challan. My goods is entered in my stock record. Corresponding, I sold these goods also to so-and-so person. That payment I received by check. That stock is also entered in my stock record. So it cannot be bogus, sir. Now, if you hear the party, you feel the party is right. If you hear the department, you feel department is also right. Then you can suggest, sir, there may be possibility. I purchased through the broker. Broker might have purchased goods from Mr. A in a grey market, and he has taken a bill from Mr. B. So A plus B is equal to purchase of goods ho gaya. But there is a possibility he might have given me bill of 110 rupee. Normally he earned brokerage of 1 rupee, but he might have purchased at not 105 or 103. He told me I purchased 110, but he might have purchased 105. So you make some estimation profit, 2%, 3%, 4%, 5%, depending upon nature of business. So alternate ground also you can write there. So he should not restrict to 100% addition. For example, my department say it is your penny stock. I purchased the share of 100 rupee. I sold for 1000 rupee. He say suddenly 10 दिन में, एक साल में, how 100 has become 1000. Then I have to enclose my purchase agreement of the contractor, stock broker. I must have paid, if a purchase in a market after 2004, I must have paid this STT. If when service tax are applicable, I must have paid service tax. Goods have come in my demat account. I sold the shares. I paid for the by check, account pay cross check to the broker. Later on, when I sold, I received money from the broker by account pay cross check. It is sold through the Bombay Stock Exchange or National Stock Exchange, where I am not aware who is the buyer or who is the seller. If Bombay Stock Exchange is bogus, then everything is bogus. If National Stock Exchange is bogus, then everything is bogus. So then, supporting all document, then you attach the what is the market rate on that particular day when you purchase. If stock exchange says this was the rate at the time of purchase, and this is the rate at the time of sale, and that value has gone up 10 times, what I can do? I am an investor. I will see my profit when profit come, opportunity of the profit. And I have done that. I may be regular investor. Then say that, sir, I am regular investor. Many times I make profit, many times I make losses. So only paper is to be enclosed. Otherwise, officer will not know what I want to say. Representing before, now we are coming, representing before the assessing officer in search and survey cases. Faceless now, we keep inside by, as far as assessment part is concerned. Now, actually what happened, this is still face to face. Normally we all know search take place when department have certain information. The information also received from the informers. Informer can be any person. He can be your ex-employee, he can be business partner, he can be your brother, he can be professional informant. Many person have business of that only. He can be retired income tax officer. So, information is received. If you go 30-40 years back in 1985, that time department used to conduct 5,000 searches every year in Mumbai. If they got information that Vimal Punmia have 5 crore rupee in cash, वो briefcase उठाएगा मेरे घर पे सुबह आ जाएगा 7 बजे. But now it is not like that. You know, all over Bombay in last year only 50-60 searches have taken place. Before that only 112 searches were there. Lockdown में तो completely बंदी था सब कुछ. So they have reduced. Now what is the procedure? After getting information, one officer is given 1 month to study the case. He will verify if the information is against the builder, he collect the black money. Then department officer will go as a purchaser. He may buy also, then all provision is there. He will buy the purchased property. Ask him what is the case and what is check. He may pay case payment also, partly by check. Take all the receipt and record, video record, audio recording and video recording. They will do that. And after verifying everything, they will see what is the standard of this person, living standard, what type of business he is doing, what type of loan he has taken, how many car he have, where he stay, how many family member, what are their withdrawal. So after studying everything, they know by reading a particular person, we are going to get unaccounted income worth 100 crore rupee. Minimum is 100 crore. Then only raid can be authorized. Practice may be 200-300 crore. So those clients who have 100 crore, less than 100 crore, we don't have to worry about the search. But connected search can come somewhere. If client is surveyed, and they feel the chartered accountant is also involved with that, or client is raided by income tax department, and they feel the CA is also involved with that, their accountant is also involved, cashier is involved, then they can cover all the person also, including chartered accountant for the purpose of survey. So sometimes a small person, he may be taking business bogus bill through some broker. Broker may be hand to mouth, but broker also will be surveyed. He is taking finance outside books of account from the half a dozen broker. That broker may be ordinary person, maybe staying in a chal, but that also will be covered. So then, that person can be covered because he is also involved with that. Otherwise, search will only 100 crore plus. So involve physical hearing, that there we go to physically. Obtain copy of, सबसे पहले you to take copy of the document seized, impounded, and statement recorded. So you know what is the matter. Then ITO will raise many questions depending upon the appraisal report. Normally that report is a very confidential between the raid department to the officer, but it is available with the client every time. Whenever client come to my office for the raid case, I say appraisal report mila, bola haan sab ye lo. So I don't know how confidential it is, but if it is a confidential, then confidential. If not confidential, you have access to that, read that. Because all question of officer will be on that only. And that is not available, seized material and statement recorded. Because question will be asked relating to those items. And that will appear only in the appraisal report. They will ask, certain question will come, general business, what is your nature of business, how many branches you have. That of course you don't have to rely much on any other paper. Simply file, give a reply, I am dealer in the metal, I have 3 branches, one in Pune, second in Ahmedabad, whatever is there, factual. How many bank account you have, how many senior employee you have, how many partners you have, how many directors you have, they are all routine detail. Then you have to concentrate only what is seized in the raid and what is question relating to that you have to go through. So, query relating to seized document and statement to be replied giving logical explanation. They say you have taken loan from this party and that party have accepted the involved in Hawala transaction. Then I told you we have to enclose confirmation, bank account, this, that, all. For example, I have taken a loan of 1 crore. Department feel that loan is bogus. Now what I can file? First I can take confirmation. My ledger account, take their signature. My bank account, check, money have come by check. Their balance sheet, loan what they have given as shown in their balance sheet as a loan. Their profit and loss account, what interest I paid as shown as an income. TDS deducted, shown in a computation of income. In my balance sheet, loan is appearing. After 2 years, I paid also by account-based check, then that bank statement, first received, second paid, then interest paid, that statement. So all supporting document you to attach. Then even officer make addition, same paper you can rely in the appeal stage. And you cannot file before appeal stage any new evidences which you not filed at the first stage. So now the faceless filing paper is very, very important. Earlier we used to file whatever we like and then we give before CIT appeal. CIT appeal many times said कि this paper आपने दिया ही नहीं है को. सर मैं तो दिया था, hearing के टाइम दिया, पूरा flat file बना के दिया है. Sir, he misplaced what I can do, sir. पर वो अभी नहीं है, ground अपना अभी नहीं चलने वाला है. So we have to file proper paper, and that only we can file before CIT appeal, and that only we can file before tribunal. Because when you file before CIT appeal, paper book, we have to certify it. That I certify that all the above papers are filed before AO. When you file before tribunal, you have to say, I certify that all the above papers are filed before assessing officer and CIT appeal. So we have certificate has to be given. Now it will be faceless AO and faceless CIT appeal. So then only we can rely on those papers. So paper must be filed. Give query-wise reply. If there are 10 issues are involved in your raid case, ITO will raise 10 questions. Sometime on one issue, he may raise 2-3 questions. Reply 3 questions on the one issue, you can combine all 3 questions. Loan separate, bogus purchase separate, salary separate, commission separate, some capitalized, some bogus expenditure, you not claim in portals account, but debit in balance sheet in plant and machinery, or building, or somewhere else. So they reply each issue separately. Right? Why? What are the seized materials is? How you retract to that? What you are saying? For example, during the course of our search, you made a statement. कि सर मैंने bogus loan लिया है, building बेचता हूँ, उसमें loan number भी लेता हूँ. I have spent also out of 2 black money. And then later on you realize कि यार वो तो मारा मारी करके ले लिया उसने. Then immediately second day retract that. As early as possible. Second day may not be possible. Maybe for 15 days, 10 days, 20 days. And just say, sir, they came on this time. In my life, I have not seen, I have not worked there for continuous 4-5 days. Officers were not going home. I was working all 24 hours. My family member, my wife, my grandparents, everyone was in tension. My lady staff were not allowed to go home. And they were all mobile phones were taken by them. So I could not reply. So make real fact what has happened in that day. Put some namak mirch on that. And accordingly make a retraction statement. Completely you can't write wrong thing, which has not happened. But finally, we have to succeed. Then accordingly, they say, sir, I made a statement, but I retracted. So statement made, you have no value. So now you have to go on a merit of the case. Merit mein what is required? If I have taken a loan of 1 crore, what I have to prove? I have to prove identity of the person. Identity is there, party is still filing the return. He assessed to income tax, his PAN number is there. Then I have to prove genuineness of transaction. Money have come by check, I paid by check, interest is paid by check, confirmation is received. Then credit worthiness. He has shown his balance sheet that loan. He has shown the interest in his profit loss account. So, and he has given me loan of 1 crore, but his capital is 30 crore. Or his capital may be, say, for example, 5 crore, but under interest is borrowing from family member is 25 crore. So, credit worthiness is also proved. So, that way, one has to present the case. And then certain judgment you take out. Take out that judgment. Only citation. Don't quote the whole judgment. Citation and enclose as annexer. So, raid case also is to be attended like, you do before CIT appeal. That similar way. Then so cause on any issue, final so cause notice to be replied. Now, after going through all these things, final so cause notice will come before ITO pass the assisting officer pass the order. And that is to be replied, like faceless may also same thing, and here face to face may, that you to take very seriously. Don't ignore it. You cannot say that I will see in the appeal. You see in appeal, but paper what you want to file, that you must file first. Attempt to be made to bring every issue in a normal provision. Because assuming you have no explanation for something. You really done something wrong. And no proper reply is there. Then try, this income is my income of a normally course of the business. Let us say I spent 25 lakh rupee on my daughter's wedding. 25 I renovated my flat. 25 lakh spent my children's education. 25 lakh given gift to my brother or sister. But I have no official money. I've given everything out of cash. And that paper is found by the department. They also asked my brother and my other person, and they found the wedding where they went to hotel, and they found yes, expenditure is incurred. Now, अभी 1 crore रुपया मेरा ऐड कर देगा, तो मेरा 60% टैक्स, उस पर 15% सरचार्ज, फिर एजुकेशन सेस, फिर पेनल्टी, it may go more than 100%. It work out to be 108% actually. Now, what is the way out? Then I must accept, sir, I am a builder. I take money under the table, and this is my out of that proceeds. During the course of search, certain papers were also found where flat number, name of party is written. And rate also is written. Sometimes builder maintains full record of unaccounted money. From where come, where goes. So it is my normal course of business. So I accept it is my income of a normal course of a business. Then if we add as a normal course of business, tax will be 30%. उधर आपका 108 तक चला जाएगा. Either 30% surcharge करके 35, 40, maximum 40 आ जाएगा. So try to switch then. Finally, end of the day, it is a fact. A builder take on money, they spend on money, everything is there. So it is already tell it. Second, we can take care. ITO बोलेगा आपके डायरी मिला है 1 crore rupee you have taken under the table at the time of sale of flats. Plus, you spend 25 lakh on daughter's wedding, 25 lakh your brother का gift, 25 lakh for your children's education, 25 lakh for furniture. So हम आपका 2 crore रुपया ऐड करता है. We chartered accountant many times, if they ask such question to advocate, he will say, हाँ बराबर है, 2 crore total होता है बराबर. But as a chartered accountant, you just see telescopy can be permitted. One is the income, second is the outgo. You can't mix up both. Your asset and liability, both you can't attach. Income and expenditure, both you can't add. Tax to income के ऊपर है finally. So there you can say, sir, 1 lakh, yes, I received. Out of that, I spent 25 for this, 25 for this, 25 for this. And this is my source, this is application. So you add 1 crore as income from business and profession, and not under section 68 or 69. So that will also solve the problem to a great extent. Double addition nahi hoga, but we have to apply your mind. Similar way, there is called peak theory. Income tax, which is not defined in Income Tax Act. But in practice, every day we follow. What is peak theory? For example, I withdrawn today 1 lakh rupee from the bank. I have deposited 1 lakh in my bank account. Tomorrow I withdrawn. Day after again I deposit. Again I withdraw. Again I deposit. 10 times I withdrawn, 10 times I have deposited. Now ITO will say 10 times 1 lakh rupee you have deposited. So आपका 10 लाख का income हो गया. अरे actually मैंने परसों deposit किया हो, कल withdraw किया था. Finally मेरा circulation में कितना पैसा जा रहा है? Only 1 lakh. Every day I withdraw 1 lakh, every day I deposit 1 lakh. So मेरा 2 number का पैसा कितना हुआ? Only 1 lakh. So only 1 lakh can be added. So you make to peak statement, what is the money involved, what is the incoming, outgoing. Official transaction का तो books of accounts में है आपका. Make unofficial books of accounts for the purpose of explaining to the AO. कि sir, these are my cash book with outside books of account as per your seized material. And this much money have come, this is the source of that, and this much deposited. So any point of time, my unaccounted money will not exceed more than 1 lakh rupee. So you made additional 1 lakh, and then explain source of 1 lakh by way of a business income, or brokerage income, or some other income. Of course, consider GST and this and that and everything. But normally tax will be much lower than as compared to the, say, 68 or 69. Reply should be on the point to point, on the relevant case law to be attached. Don't attach many case law, attach only 4 case law, but relevant point to point. So discharge owners, means our duty is to discharge owners on each and every issue. And then department don't do their part, that will go in your favor. But if we ourselves we don't do our homework, then of course it goes against us. Preparation of statement of fact and grounds of appeal. Now we come to appeal. Friends, if you know how to prepare grounds of appeal and how to prepare statement of fact, 50% appeal you know. Simply many times, many young children, they don't go to the tribunal. But it is very, very simple. I will just say, appearing before CIT appeal is 10 times simpler than attending before assessing officer. Appearing before tribunal is 10 times simpler than attending before CIT appeal. But there you have to do cream of cream you have to take out. So you have to prepare a statement of fact. Now statement of fact can be written like written submission. Not be very lengthy, but at the same time you have to explain everything whatever you want to explain. Factual, legal. Like particular item, disallowance of, say for example, ITO made a salary disallowance. Right, salary disallowance, this much money. Why ITO disallowed that? Write that part. He feels that this person was paid salary of 2 crore, and that person was not required in the purpose of business. And that person had qualification of only SSC because the relative of a partner, so 2 crore is paid. Or whatever reason he has written, we point out that. Then give our reply. Ki, sir, he is himself is a partner. And partner mein section 40, as per rule, he is entitled for 2 crore. Formula has been given in Income Tax Act. Or that person I paid him, salary is paid, he is today there will not be any business in that particular firm. But I have 15 group company and he look after everything. That person is working with me for last than 35 years. Today there is no project. So I cannot remove him. Tomorrow I will have project. So and the person is genuinely coming to office. If you really pay the salary, if he comes to office, then naturally he must be doing something. Point out that. We are in search of a project. Every day we go to the bank. And like, one of my clients, Nitco Tiles, there what happened, we have taken a BMW on hire. That time big business was there. Suddenly business had dropped like anything. Or that company partnership fund was converted into a limited company. So in partnership there was no business much, only maybe few lakh here and there. So tribunal asked me the question, why you are keeping BMW? So I said, sir, today business is not there. But we are on the job of searching another business. Many persons come from the China. They come from this, wherever marble is produced, Australia or somewhere else. And Belgium. And we have to take him in a Belgium. We have to take to our site in Alibag or Gujarat or wherever we have plant. In BMW only. I cannot take him to cycle. Betha ke nahi leke ja sakta usko foreigner ko. So tribunal, and agreement is not executed today. It is executed 8 years back. So I have to continue for another 4 years. And of course appeal was allowed. So you have to justify that item. He said, why you kept person of 50 lakh? For example, I have my receptionist in my office. I pay 25 lakh rupees per annum to her. Of course, I don't pay, but I give you example. So 25 lakh per month, per annum. Now office says, why you are keeping receptionist of 25 lakh? You can get easily in 25,000 per month, so 3 lakh will be there. Now who I have to keep? How much salary I have to pay? What type person? That is my decision. Department cannot direct me. They have to collect tax on income. If I spend more money, it is department is losing only 30%. I am losing my 70%. So it is my decision what I do. So that, and again in each issue you will find certain judgment. So each initial 2 grounds can be, when you prepare the grounds of appeal, write, one ground as simple as possible. No, statement of fact will be lengthy. Grounds में what you write, ITO is not justifying disallowing loan of rupees 1 lakh, 1 crore from so-and-so party, or loan of rupees 1 crore. He is not justifying disallowing salary of rupees this much. Only 1 line, 2 line or 3 line maximum. Now, for example, let us say my ground is, I spend money by credit card. I paid money for various expenditure through the credit card. Now, ITO feel I have not shown the credit card expenditure, so he want to make addition in my computation. So he made addition also, get 20 lakh paid by credit card, he is added back. Now, if I have not replied earlier, then there will be some person will get confused. But if I have replied earlier, if credit card expenditure I have not debited in my profit and loss account, I have debited to my capital account. I am not claiming the expenditure, that is my personal expenditure. Then I can say, in my, still ITO made addition, because reopening was based on that, so he said he have no choice and he used to make addition. Then I can reply, AO is not justified in disallowing expenditure of credit card of rupees 20 lakh, when particularly I am not debited in my profit loss account, or I am not claimed as expenditure. So that ground should be self-explanatory, but don't be lengthy. Don't quote any judgment in grounds of appeal. All judgment you take in the facts, statement of facts. In cross-examination, witness, you ask for the cross-examination of a witness. I was not allowed it. Now you ask before the CIT appeal. I asked for the cross-examination of the witness on this date, by letter dated so and so. But officer not given me. So that ground can be taken. So commissioner will allow you the cross-examination, or we will allow your appeal. Okay? Because without giving, if you ask for the cross-examination, and officer is not giving you, then any order he passed subsequently will be bad in law. And there are a number of decisions which we can quote in the statement of fact. A residential ground, and last may keep ground for penalty, not justifying living penalty, not justifying charging interest under 234 ABC, and no, keep one more ground, I have right to amend, alter additional grounds of appeal on or before date of hearing. So then tomorrow if you have to come to know something more, you can add there also. On legal issue, something you not challenge before the assessing officer, you can challenge before any appellate authority, CIT appeal or tribunal or High Court or Supreme Court. Preparation of paper book. Paper book contain the key document of argument before CIT appeal. Paper book is to be prepared properly. Start with the computation of income, audited final accounts. If gross profit is involved, then the tax audit report, GST audit report. If any other audit is there, include that also. Then go ground wise. This ground, for example, salary disallowed, then again, whom salary is paid, name of party, his amount paid, what work he is doing, his PAN number. Bank statement, salary voucher, what work he is doing, make a chart, and in last column you can write that way. Bogus purchase, then I told you, loan case, what is to be enclosed, depending upon the case to case. For example, I have taken a share capital. I issued the share in the public. Many public are prescribed. Then department say all are the bogus. Then attach that first name of that party. He's not bogus, so his balance sheet, his profit loss account, his bank statement, my bank statement, his auditor certificate, money is paid by so-and-so check number. So all, whatever, depending upon case to case, we have to include all the documents. Basic document is to be enclosed, like balance sheet, etc. All relevant document, evidence must be filed before CIT appeal, before the hearing, and before, when you file before the tribunal, we have to file before DR, before department representative, 7 days in advance, before member, 3 days in advance. But normally when paper book is ready, better to file 7 days in advance before both parties. Why to go up before 3 days again? Why to spend our time unnecessarily? So you file at least 7 days in advance. Otherwise, if you file in last moment, then member may hear the case or he may adjourn also. And then recovery proceeding may create problem. If you have filed certain, for example, I have, let us take a CIT appeal, before CIT appeal there were 5 grounds. 3 grounds CIT appeal were allowed. 2 grounds he have dismissed. Now against 2 grounds I have not filed appeal, I have accepted. But against 3 grounds, department is filing appeal. When a department is filing appeal, I can within 30 days can file cross objection. Cross objection is like appeal. Main appeal go in form number 36 before tribunal, cross objection go in 36A. And when file the appeal, you have to pay 10,000 fees. 1% of the income or 10,000, whichever is lower. Or less than 2 lakh income, 1,000 rupee. If more than 2 lakh, then 1%. Maximum is 10,000. But if you file the cross objection, no fees. So earlier I have not challenged the 2 ground. But here I can challenge now. There are two ground also, and I can claim that relief also from the tribunal. I will give an example. There is Oswal builder of Bhinder. They had a big project of 30-40 buildings. Shown profit also. They were entitled for deduction under section 80IB 10. That time they were permitted if your area of plot is more than 1 acre. Construction is completed within 5 years. One flat is sold to one party. Each flat is less than 1,000 square feet in Bombay and Delhi and up to 25 kilometers. Other places 1,500. And area, these all 4-5 conditions are fulfilled, then profit of builder was exempted. Now that time lot of controversies there where commercial area is exempted or not. So we have filed appeal. CIT appeal allowed in case of Oswal builder that whatever residential part is concerned is exempted. Whatever taxable part is concerned, commercial part is concerned, it is taxable. And we have to pay 12 crore rupee by way of a tax. Matter over. After 4-5 years, they were raided by Income Tax Department. ITO again made the addition of same income. Same appeal was filed before CIT appeal. CIT appeal followed the earlier order and allowed me residential, not allowed commercial. And we have not challenged that. Taxes were already paid earlier. But against the residential exemption, Department of filed appeal before the tribunal. Matter came before tribunal. Now when we have come to know Department file appeal before tribunal, we have also filed the cross objection. I am entitled even for the commercial area. Earlier I have accepted. Had Department not filed appeal, Department got 12 crore rupee from me. But I filed cross objection. Matter came before tribunal. And meantime, there is a number of judgments have come even from Supreme Court, Radhe Builders and many other cases have come. In my office, I had a half a dozen cases that commercial was allowed. We quoted that judgment before tribunal. So Department appeal was dismissed, residential allowed hai, commercial हमारा cross objection allow हो गया. And I got refund of 12 crore which was paid 5 years back, along with the interest, so we got 15 crore back. So भाई पार्टी बोलता है इनकम टैक्स रेट डाल के क्या फायदा ले लिया है, अब तो 15 करोड़ अपन को दे दिया है. So that is the system. So and again, if you want to challenge raid itself is illegal or some technical point, then we must argue first. Of course, one thing is very clear. Even department, in case of raid, other cases, if department not followed proper procedure, then your assessment will become bad in law. As far search seizure is concerned, even they say that raid is not valid, it is illegal. Even High Court decide or tribunal decide. But even then, whatever paper found during the course of search, incriminating document found during the course of search, that can be relied. So ऐसा हो गया नहीं, operation successful, doctor बोलता है operation success हो गया, but patient died. So such case में we should not take that chance. But in other cases, yes. Legal ground we take first and then take the facts ka point. अरे भाई आपका क्या है ये? I can't make out any. चलो इसे ही चलते हैं. The paper book containing, अरे कोई है कंप्यूटर वाला? ये पेपर कैसा आएगा? पेपर बुक कंटेनिंग, मेरा पेज नंबर नहीं दिख रहा इधर.
16 नंबर है. कितना
14
14 चाहिए. ये चाहिए ना? ये चाहिए. फुल स्क्रीन नहीं करता हूँ.
चलेगा चलेगा फर्स्ट. सर मैं 5 मिनट और दूँ, चलेगा ना? 5-7 मिनट. ओके थैंक यू. मैं वॉच देख रहा था, 3:30 हो गया मेरा. Now, preparing paper book before CITPL and ITAT, paper book containing the key document, argument before CITPL and ITAT to be attached. It should be separate for all document with AO and additional. Now, if in case I have not filed certain paper before AO, filing before CITPL, I must make separate volume for that. Judgment you can file, whatever you want. Judgment manage the bar. Written submission you can file, even not file earlier you can file. But documentary, supporting document, make a separate paper book and clearly say that these are the papers are not filed before AO. Now, why not file? And you want to be admitted before CIT appeal, then you have to make a prayer also under Rule 46A. And once you make a prayer, then you have to explain three things, how these papers are very relevant to decide this appeal, why you not file earlier. So we can always say officer not asked, and I never thought these papers were that required by him. But now he made the addition, so I have to rely on this paper. Or these papers were not available at the point of time. I obtained subsequently when ITO made the addition. So justify that, and additional paper will be admitted. Basic document, audit report, statement of fact, sample, वो तो आपने पहले भी किया होगा, वो ground wise, बाकी paper general आएगा, then remaining all will be ground wise. All relevant document and evidence must be filed with the CITP or ITAT. Now, if you are filing something with the ITAT first time, you have not filed before AO, not filed before CITP. Before tribunal we are filing for the first time. Then you have to make a petition under Rule 29A and admission of additional evidences. And same thing, we have to prove how they are important, why we have not filed earlier, and how they are very relevant at that point in time. Proper index is to be made. 2 copies of paper book to be filed with the CIT appeal mein, in case you are filing additional evidences. Now, faceless mein to ek hi jayega, but in case face-to-face central circle raid cases, then file 2 copies. The 1 copy, commissioner will forward it to ITO, take his report. When you go before tribunal, give 3 sets, 2 for member, 1 for DR, and 1 of course our copy. If your documents are in Marathi or Gujarati or some Urdu or some another language, then make that translation in English. Attach that paper, attach English translation also. You're relying on certain purchase agreement. Let us take example, ITO want to make addition that you purchase the flat in say 2 crore rupee. Stamp duty value is 3 crore. So he want to charge you tax on 1 crore. Then my stand will be, sir, this agreement I have purchased in 2013. I paid token money in 2013. Letter of allotment was given to me in 2013. And I paid further installment as per installment whatever required. 2017 he given me possession and made agreement. So stamp duty have come from 2017. So you cannot charge me stamp duty value of 2017. You have to charge me as per 2013. Then you have to enclose 2013 ka paper to rely on that. Your bank statement money is paid. And for example, 2013 ka agreement in some different language. Officer will not understand. Member may not be from Maharashtra, he may be from somewhere else. So make English translation and attach that also. If CIT want any remand report, then he will ask for the remand report. If any additional ground is taken, I don't know what is this. Let me go from this only, there is no time. If any additional ground is taken, same to be handled in appeal. So additional ground you can take and you to reply accordingly. Another paper, I think it's basically same thing. Appeal for search on survey cases, that will be face to face. Most of the edition based on facts and document. Summary of, ignore this, I have not changed. Summary of editions to be prepared and chart. After making written submission in detail, make a bullet point also. So at least if you go through the bullet point and accordingly you can refer what you want. You can write in bullet point only, page number, this issue has been handled at paper book page number so-and-so, written submission page number so-and-so. So in case I want to go in detail, he can do that. Focus should be on the shifting of normal income. I told you, 30% mein leke aayenge to acha hai. Cross-examination of witness, if you want to examine, write that. If all evidences and argument to concur, the addition should be filed here. Tribunal is the last fact-finding body, so we have to be very systematically there. Then you have to go to High Court, and High Court may take years. Now, friends, let me give you an example. One case study I will take 2-3 minutes. How to prepare for the appeal. 2 cases I will take. There was a case before, there was one of my client. His 2 assessment was going on. He claimed deduction under section 80IB 10, and amount was coming to nearly, deduction was claiming to the extent of 600 crore rupee. Big project, 100 building is constructed in Andheri area. Officer wanted to verify whether his claim is correct. So he deputed district valuation officer. Okay, you go and find out whether area, plot area is more than 1 acre, construction is less than 1,000 square feet. खाली 2 minutes last. Construction flat is less than 1,000 square feet and all conditions are fulfilled or not. DVO verified and given a report. And he was satisfied, he said, yes, everything is fine. Deduction was allowed. After 2 years after that, raid has taken place. Again, same DVO come. And they say, flat area of flat is 1,775 square feet and not less than 1,000. Further, he said, building is not completed, still work is going on. Though BMC has given me the occupation certificate. And he said, today we are going to give in the press that this is the reason and wrongly BMC issues certificate like this. Now, if it comes in a Times of India, BMC officer will be, there will be a problem for them. So that time client accepted declaration of 600 crore, I will pay tax on this. After a few days, we retracted the statement. ITO made addition, appeal, matter was before the tribunal, before the CIT appeal. CIT appeal said, I want to see myself. He called again district valuation officer from Pune, again verified. And in that, he found that 50% flats are less than 1,000 square feet, 2-bedroom hall were less than 1,000 square feet, 3-bedroom hall were more than 1,000 square feet. So he partly allowed against that department to file appeal, and we also file appeal. The matter came before tribunal. Now by that time matter came before tribunal, earlier we used to take area as per municipal corporation, as per plan of municipal corporation and construction is accordingly. In 2009, Department of Income Tax Act is amended and area how to determine is given in the Income Tax Act itself. Now because of there was one comma in the section, we succeeded. I want to tell you that. Definition is only 1.5 line. Built up area means carpet area at a floor level and then comma. If there was a full stop, that point end there only. There was a comma. Including projections and balconies, but excluding common area. This is the whole definition. Now, how to determine the area? So before tribunal will say, sir, you have to go through the definition. Carpet area means built-up area means carpet area at a floor level. So what is area on the floor? If I put a carpet, how much area carpet it will occupy? So we have taken that area. After that, comma, including projections and balconies. Now projection means balcony outside the flat. That was 200 square feet, but 1 feet below the floor. Now wording has to go as per the floor level, if balcony is there, that is to be added. It is below the floor, so that is to be excluded. Flower bed is 21 inches below the floor level, below the flat level, so that is to be 200 square feet excluded. Carpet area at a floor level. Now this is a wooden, this is a cement floor. So this is not at the floor level, it is above the floor level, this is to be excluded. Then common wall between the two flat, that is to be excluded. Because excluding common area, they say. Then nowadays what happens, security purpose, they keep pipeline in the flat. Earlier they used to keep outside the flat. So that area, in kitchen there is a 100 square feet block. Normally keep refrigerator, keep washing machine, various many things. So that was actually in the flat, but that is not an area belong. Any leakage in any building, in any flat, those person can come here and repair it. So that is not my area, that is a common area. That is to be excluded. And finally we have come to 999.75 square feet and tribunal allowed my appeal and more than 200 crore was paid taxes, got the refund. Thank you very much.
Thank you, Vimalji, for such a beautiful session. May I request everyone to please settle, allow me 2 minutes only, not more than that. But we'll take 2 questions, so anyone, any questions, you can raise your hand and someone will get a mic to you. 2 questions, 1 year. Chandrakant, mic, or otherwise, yeah, I'm coming to you. 1 year. You can maybe raise, we'll be able to listen to you, yeah.
Thank you very much for the very good presentation, sir. It's very informative. And sir, my query is a person in the course of business, he's been raided and he has declared that income is from business, cash income, builder का case जैसे आपने अभी बोला. And if I'm declaring, say, 2 crore rupees is cash received from the customer. Now, 2 things. Penalty under 269 ST and second, impact on GST.
GST, I myself don't know. But as income tax is concerned, in such cases, whenever you declare something, all section 269 SS, 269T, 48.3, all to be ignored. They are not very serious about that. Earlier, there was a body called Settlement Commission. For February 2021 also that discontinued. So don't bother about any penalty section. You have declared the income, more than sufficient. You have to know. You have to do little research.
Hello.
Open any commentary of Chaturvedi or D.M. Harris or Ranina or anyone. Go through that section. और नाउ तो कंप्यूटर में भी आपको मिल जाएगा 4000 जजमेंट मिलेगा उसमें आपका 5-6 जजमेंट काम का निकाल लो बिकॉज पेनल्टी ऑलवेज यू नो इफ यू हैव नॉट सोन समथिंग ना इधर तो आपने 132(4) में डिक्लेयर किया है दैट इज द होल आइडिया ऑफ द सेक्शन गवर्नमेंट डोंट वांट टू पुट प्रोसिक्यूशन एंड पेनल्टी ऑन एवरीवन दे से वी पे टैक्सेस और रेड कर दिया टैक्स भर दिया तो और उसके अंदर ही पेनल्टी तो 10-20-30% या अभी तो 30% या 60% लगेगी इफ यू डिक्लेयर समथिंग वॉलंटरीली 30% पेनल्टी है इफ यू डोंट डिक्लेयर वॉलंटरीली so in the return that time also 60% or if you not declare item make addition then there is another percentage so you will find some judgment penalty will be not there.
Hello. Yes, sir. Thank you very much for your detailed this thing on the chapter. Now, you tell me, sir, there are a lot of appeals are pending right from the assessment year 10-11. Even 250 notices are coming. We are replying. Not once. It is 2 times, 3 times, 4 times, 5 times. In spite of that, the orders are not coming. What is to be done? Number one. Number two.
ये बता दूं पहले ये बोल दूं पहले
Yeah. Yes.
our prime minister is aware of this last time prime minister returned to all the commissioners all faceless appeals wala why they are pending in my office आपने तो 2-3 टाइम बोला मैंने 10 टाइम रिप्लाई किया है अभी तक पेंडिंग है if you don't reply they pass ex parte order if you reply they don't pass the order so prime minister that time they say sir we have a lot of work we need a lot of verification this that all so 100 additional commissioners were appointed further in CIT appeal department and when matter was less than 50 lakh it was assigned to them they were allowed even to give their name also वो notice में नाम भी डाल दिया किसका notice है किधर से आया है so if party want to approach they can do that तो anyway so CIT appeal के पास में ये law ये budget में provision डाला था last time that in case your order is not passed after compliances you write to the chief commissioner कि सर ये मेरा नोटिस है ये असेसमेंट है ये जुडिक्शन में आता है और ये टाइम पे मैंने इसका कंप्लाई किया है और अटैच द प्रूफ चीफ कमिश्नर विल गिव डायरेक्शन एंड होपफुली विद इन 30 days it will be resolved in case it is not resolved then you write straightway to the prime minister in CP-gram and action will be taken.
All these resources, all these recourses have been done by me. I returned at least 3. Even I had written to the CBT chairman. I have written to the CBT chairman twice. Even 2 reminders also. There is no action.
CP-gram लिखा CP-gram.
CP-gram I had given 2 times, but no response.
तो मोदी जी का पर्सनल आप मेरे को फोन करना है. I will give you personal mail right there.
Okay.
No, honestly, not
Thank you,
joking,
sir.
but seriously.
One more thing is that in case of the SSCs, they are in this thing outside India, NRIs, and how they will see the portal when they have not come in India for many years, 5-7 years, and they have been their cases have been reopened. Saying and secondly, the 272B this thing, orders have been passed. I don't know.
सर पोर्टल तो किधर भी देख सकते हैं
नहीं, but
मेरे पास में नॉन रेजिडेंट क्लाइंट मेरे बहुत है
Question is that because 5 crore, more than 5 crore people are outside India, NRIs. Are they this thing required to see the portal because they have not come to India in spite of their cases are reopened and this thing. It's a very
सर
very
केसेस
funny
आर
thing.
रीओपन देन तो दे हैव नो चॉइस दे हैव टू सी
नहीं, even I have
और
seen-
जिसका कुछ है ही नहीं इंडिया में तो नहीं देखेगा तो
नहीं, but
चलेगा
question is that कि भाई they have been harassed. Now
वो तो सर अभी अब मैं रिप्लाई नहीं दे सकता यू टू राइट टू सीबीडीटी और डू समथिंग
Okay.
बट एक्चुअली मेरा जो नॉन रेजिडेंट क्लाइंट है दे सी पोर्टल मोर देन व्हाट आवर रेजिडेंट क्लाइंट सी उनको नोटिस आता है मेरे को शाम को फोन आ जाता है उसका और रेजिडेंट वाला तो हम उसको फोन करते हैं भाई तेरा स्कूटी में आ गया है
चलो,
Thank you, sir. Thank you. So,
हाँ नाउ डेज यू नो मेनी टाइम अभी लास्ट मोमेंट का 15-20 दिन छोड़ दो दिसंबर का और मार्च का अदरवाइज दे यूज टू सेंड ऑन ए पर्सनल मेल दे सेंड SMS ऑल्सो एंड पोर्टल पे सो उसको थोड़ा अपडेट नहीं किया होगा तो करना पड़ेगा वो सब दुनियादारी करनी पड़ेगी
thank you, sir. So,
और नॉर्थ इंडिया का इनकम ही नहीं है तो काय के लिए टेंशन लेने का
Okay, friends, sir, we'll take it off in the break also. Let me summarize quickly in less than a minute. So,
1 second, I'll just answer him. There's the judgment of Delhi High Court which says if you have uploaded on a portal sends SMS. If they have not given an SMS, then it's actually not a valid notice also. There's a judgment of Delhi High Court on that. So there should be a real-time alert coming along with the portal because the judgment says that you are not expected to go on portal suo motu and look into it. So that's one of the Delhi, I thought I'll just say. Secondly, sir, on this, we had a meeting on CBDT on disposal of appeals. There were 6 lakhs pending CIT appeals of last year, which has come down to 3.75. In fact, government and is fighting. Grapevine says that this is result of actually a fight that commission appeals do not want to continue with the faceless appeals. In fact, informally, they always tell us that why not institute take up this matter that faceless appeals should be discontinued. I'm just thought I'll just appraise on that. Thank you.
great. Thank you, PVP, for that input. So, friends, what I could make out is don't unnecessarily make a very lengthy reply. Understand the facts of the client. Each case, the facts will differ. To the point, short and specific response. Again, of course, we'll have to give a lot of supportings. We'll have to attach the right case laws. And for case laws, we'll be referring to multiple databases. I think like wherever there are a lot of, submission, then indexing and referencing is very important. And of course, overall, I think the written communication will have to be very good. And when you get into a video conference to go and explain, again, the oral communication will become very, very important. So that is what I could make out from there. My request to you all, see, as I understand, and we divide the direct tax practice into 3 buckets. One is the compliance, filing, taxation, payments, and returns. On compliance, many of you must be using various tools. WIRC, ICS tied up with many. If you know of any good tool or software which a practitioner can use, please write to us at wirc@ici.in. We'll reach out to the vendor, we'll do a demo, we'll do a discounted rate arrangement so that everyone can take benefit of that. Of course, for litigation, you must be using various databases. We are also conducting courses on ChatGPT, Google Bard, and Microsoft Capilot. I think it is very, very helpful. Once you give the specific questions you ask, it gives you a very good answer. 90% accurate, but you still need to read and correct. And of course, the last one is restructuring. I think there a lot of application of mine is required. But the only thought, again, from this session is technology is all pervasive, and whether it is compliance or litigation, technology will be important. With that, we take a break of 15 minutes. We'll be giving you a box of snacks. You can go out, collect the box, and tea, coffee is being served. In sharp 15 minutes, we again start the session. A huge round of applause for Vimal Punmia, sir, please. Thank you.
Good evening, everyone. Welcome after the fantastic break. Again, interesting session. After very fantastic session by Vimal Punamia sir, yet another interesting session on succession planning, will and private trust. I recognize the presence on the dais, our eminent speaker, today's speaker, Vishal Gadaji, immediate past chairman, C. Arpit Kabra, immediate past secretary, CA Saurabh Ajmera, regional council member, Rudesh Pankhania. So we all prepare our will and do the succession planning. So accordingly, our assets will transfer to our successor properly. Inheritance tax is worldwide applicable. But in India, of course, it has its own way. So is it complete tax-free or something else? So this is the talk of the town discussion in our current session, and we have very eminent personality, CA Vishal Gada, with us. Sir, thank you so much for accepting the invitation, and we agree with all of us today. Welcome you at the platform of WIRC. So without taking up much time, I directly would request our immediate past chairman, CA Arpit Kabra, for his address to the participants.
May I request everyone to please take your seats back. We're about to start the session. The desk is ready. May I request the staff, Chandrakant, who's there outside, to get as many people, quickly as many people as possible, so that we don't put in a lot of time here and then we can hear the speaker well. Good afternoon, everyone. Can I hear a response, please, from all of you? I'm sure you've taken tea and everything. Good afternoon, everyone. Hi, welcome to DTRC, the flagship program of the WIRC. We just heard a phenomenal speaker, Vimalji. I think he is a savior in real sense, not only in DirectX, but also in WIRC. Whenever we need any guidance in taxation, I think he's one man who's always stood up to the occasion, and thank you once again for doing that, sir. Believe me, this is a hot season now, not because of the climate, but yes, because of the new government which has come in, budget that are being proposed in July that may come out very soon, lot of apprehensions, and one move that has been the talk of the town recently. Let me share with all of you, the cabinet secretary himself, Mr. Malhotra, was on the rounds, and he did, for the first time ever, we've heard a cabinet secretary do a reach out programs. We were fortunate enough because when he visited Mumbai, WIRC did made its presence, and in the absence of our chairman, I got a chance to lead that entire conversation with, of course, Ketan Bhai making the representation on the Direct Tax Committee. We had a wonderful gentleman, CA Ishraq, contractor. Is he around? And therefore, the question that was asked on CIT appeals, pending CIT appeals, that was the buzz of the town. Everyone was talking about it. The reply that he gave is, as sir mentioned, amongst, of course, there are some grappling issues, but the biggest issue that they are facing is system, the technology, the tech, and how seamlessly can it be. For example, every now and then they have to update. The CIT appeals are not very, very clear in terms of how to use these tech platforms that they have created, and plus they are not syncing well. And in absolute real, understandable language, he mentioned that there are a lot of issues in faceless CIT appeals, and that is when we took a opportunity to say that, so can we do a hybrid model here? Just like after COVID, we did a hybrid model for CPE. Why can't we do some hybrid model here, wherein some threshold you could make where CIT appeals could go by faceless, and most of them can really happen in maybe physical manner here and there. There was an uproar from the entire audience. Everyone was very excited about this kind of an idea, and I'm sure when a cabinet secretary who the CBDT and the CBIC, both of them which are under his control, when he makes a statement, when he talks about something, there is bound to have some action on the ground as well. But yes, that's for sure. One thing that was made very clear was, how can we be very precise, how can we be very concise, and how can we actually present to the point. So therefore, one thing that has really made a huge difference now and then is technology. And therefore, I would request all of you to please kindly work upon these technology aspects. At WIRC, of course, we are doing all of these programs day in, day out. But suppose if, while I was interacting with so many of you, I just got to know that, there are some ways that these things are not reaching out to you. Please follow us on, our social media. The one thing that everyone says is, social media is a nuisance because it hears you. And when it hears you, it gives you everything. So you are the product, and therefore they are giving it free of you. But there's one new dimension to have a look at this. A perspective is, if you are looking at something, suppose you want to hear today Vimal Punamia ji at DTRC, just keep your Instagram open and talk about, I want to know what is happening at WIRC with Vimal Punamia ji. Believe me, in the next 5-10 minutes, the Instagram or the Facebook will start showing you reels where Vimal ji is hashtagged, or the keyword Vimal Punamia is there, or maybe WIRC is there, or maybe something is there. So the idea is, it is technology which is invented by a man, technology has invented a man. Probably we can actually put it to use the way we want it. And sometime it really does wonders. It can be a savior as well. And that is what the entire discussion is all about. Today, since Vishal Bhai is here, I think we'll be talking about nomination bills. I'll tell you one important aspect where nomination has become so important for something that can really move mountains now. It is the Digital Personal Data Protection Act. Believe me, in that act, there is a section which says you have to appoint a nominee even for your data. So you all are data principals, there are data fiduciaries who will use your data for a particular purpose. This act for the first time sets up in India a concept called as the data. As we have always mentioned, data is a new oil and data is price, this is expensive, all of this. But now this data will also be, just like any of your assets, will also have a nominee. I'm sure you must have given your nominee details in your SIPs, in your equity and all of these. But Vimalji, your data now, if you're giving it to anyone to use it for a particular purpose, suppose an HUL or a Marico or someone, a Patanjali, whether you are identifying some research product for them and you become a data for them, you will have to give up. So therefore, friends, the point is, back in 1990s when there was a huge revolution because of a commodity called oil, 3 attributes that happened was, 1, it was only available with restrictive countries. Second, it always used to be processed. You know, it cannot be used in raw form. It always has to be refined. And third and most importantly, there were only few companies who actually controlled the entire supply. The same thing is equivalent to our data today. And therefore, I may not be exaggerating this statement, but yes, a big revolution is on the cards because of this commodity called data. And unlike the Gulf countries, it will be India. It will be this subcontinent which will have the maximum. Let me tell you, in population-wise, in every 4 years, we produce 1 Australia. But every day, we produce 1.8 times Australia in data. Every day. That is the kind of data that we create. And there are a lot of companies which are only and only monetizing this data. Example, Clearview.ai. Now, therefore, it is important that all 3 attributes, and somewhere this data is controlled by handful of companies, be it a Geo, be it a Metaverse, be it the Instagram, be it Facebooks or whatever of the worlds, be it the WhatsApp, but it will be, the epicenter would be here in India. And that will be a revolution of sorts. As a CA community, no one stops us from playing a very, very critical role in this revolution. And therefore, it's always a vision that we always talk about. And today on this DTRC, let me welcome all of you and let me present to you how can we as chartered accountants become a force to work under this DPDP, the Digital Personal Data Protection thing, wherein everything that you talk about, be it compliance, be it litigation, be it penalties, be it procedures, everything is as what we are doing in direct tax is what is happening in DPDP Act. With these words, nominees are of great importance, and thank you Vishal Bhai for being here. I really congratulate Ketan Bhai for a wonderful structure today. And may I request all of you to have a huge round of applause for the entire WIRC and the speakers today for having a wonderful program up. Thank you very much.
Thank you. Now, without taking much time, I directly request to Saurabh Ajmera for the formal introduction of the speaker.
Thank you, Sweta ma'am. Before going to introduction part, let me congratulate once again to the WRC team. In absentia, the chairman of WRC, C. Ankit Rathi ji, and Ketan Bhai for wonderful hosting such a great program. This is the signature event of WRC, that is the DTRC. Every year we are having such programs. And friends, last year we have completed our regional conference in such a different way with the grand success. So this year we move to the larger landscape, you can say, the Geo Convention Center, where we are expecting more than 5,000 participation from our chartered accountant brothers and sisters. And we are hosting more than 100 exhibition over there. We are planning all the subject matter which is our need of the hour, be it startup, technology, capital market, direct tax, indirect tax. And we are inviting all the stalwarts in our regional conference on 23rd and 24th August. So my request to each one of you, please do participate in such big program also. Without taking much of time now, I'm really privileged to introduce such a great speaker on the topic of succession planning, private trust, and will and HUF. CA Vishal Gada. CA Vishal Gada has over 24 years of experience in advertising clients on tax and regulatory domain. Prior to founding Ortus Consultancy, he was the partner at KPMG and one of the co-founders of Dhruva Advisors. Vishal has consistently featured in the list of top 10 tax professionals in India in the survey conducted by the International Tax Review. Vishal is a qualified chartered accountant and has completed the business consultancy studies course conducted by Jamnalal Bajaj Institute of Management Studies jointly with the Bombay Chartered Accountants Society. He also holds a Bachelor of Law degree, and he is the regular speaker of WRC and the part of various committee at WRC. Vishal has worked on numerous complex M&A transaction, corporate reorganization and regulatory issues. With this brief introduction, I request each one of you to welcome our speaker, Vishal Gada, with a big round of applause. And I request the immediate past chairman, CA Arpit Kabra, the past secretary, Sweta ma'am, regional council member, Rudesh Bhai, to present bouquet to him. Over to you, sir.
Vishal, you can start. Let me acknowledge his contribution in entire structuring of DTRC. Really thankful to you, Vishal, for giving your views on the various topics, supporting with the speakers. So really thankful to you on behalf of Direct Tax Committee of WIRC. Thank you so much.
See, I think as members of institute, the principles of mutuality apply. So really the transactions between the members are exempt and not subject to any acknowledgement. So thanks a lot to everybody and my colleagues and seniors. I think we'll have around 60 minutes to talk about succession planning, trust, etc. I don't think this time is sufficient. But, and I might not even go through exactly as per the PowerPoint presentation. So let me talk a bit impromptu. Hopefully we'll have some 10-minute of Q&A at the end. I think this subject of succession planning, trust, wills is gaining importance because of a couple of potential trends happening. One is families are becoming more global in nature. So you will have many families which will have some members who are US citizens, UK citizens, where already there is a concept of an inheritance tax. We had a concept of inheritance tax somewhere in the 50s to 80s. The then Honorable Finance Minister, Mr. VP Singh, had removed it. One of the reasons cited was there are not much collections. And I don't know if anybody can guess what was the highest rate of inheritance tax at that point of time. Anybody wants to try it? Absolutely, right? So if you have assets worth 100 rupee, you are passing it on to your successor. You have to pay 85 to the government. And Vimal Bhai would have seen, right? We would be in our kindergarten in those days, etc. So, and then you had a multitude of diamond structures and all, very innovative things created in those times to avoid it. But fast forward to the 21st century, the valuations are sky high. The real estate prices are, super duper. The companies are, at its highest market cap. So if you look at the actual wealth or even the paper wealth, right, we are talking about trillions of dollars. Somebody said that, let's have a limit of 10 CR of estate duty. And I said, most of us live in houses which might be valued at 6, 7, 8 CR. So we are all going to pay estate duty at some point of time per se. So one trend is that you have huge valuations, huge wealth being created. Second, family is becoming global. One or other branch of the family is already living in a country where there is already an introduction of a estate duty. Third is, you see more and more disputes happening, right, in the family. This is unfortunate. But that's again, I would say, push and pulls that I want a clear interest, I want a clarity of what I own in the larger family. Fourth is, you see divorces increasing, alimony disputes happening. multiple things. So obviously, I remember I was in London a few years back to create an overseas trust, and I was in this firm known as Mishuhu in London, and there was a book which they had printed. The title of the book was 18th Century Laws for 21st Century Human Relationships, right? Which was absolutely an apt title, saying the law has not really kept pace with how family dynamics have evolved per se. And I think it so much applies to India per se. If you really look at the whole gamut of, succession planning, which is nothing but transfer of wealth to family in a peaceful manner. One is, you create a will. Will has a couple of challenges. Will can be challenged if certain members are not very satisfied. Second is, you need to have a probate. There is a commission report which is recommending removal of the probate process in right now it's only 3 cities where you need a probate, but practically you have to take a probate everywhere because bankers are not comfortable, potential buyers are not comfortable. So will requires a probate, which is a lengthy process. And third is if tomorrow an estate duty were to be reintroduced in our country, right, which is nothing but a death tax, then a will not help you, will not protect you per se. So these are some deficiencies of a will. Somebody said that, how about putting wealth in an HUF? You can put a wealth in an HUF, and after, if at all the UCC comes, whether the concept of HUF remains or not needs to be seen. But the problem in an HUF is that it does not protect you from a potential estate duty. Your interest in an HUF is absolutely defined. All the co-partners carry a equal share, right? So if somebody expires, his share in the HUF can be measured as if though it's a share in a company, and it can be regarded as an asset disposed on the death of a person on which estate duty can be levied. But more importantly, in an HUF, the Karta does not have the discretion of whom to give how much. He has the discretion to decide where he wants to apply the wealth, whether he wants to put it in mutual funds, he wants to put it in fixed deposit, he wants to buy a real estate. But when he distributes it, right, unless the members consent that somebody gets 10%, somebody gets 5%, he absolutely has no discretion. So if you want to create a structure where the head of the family, the patriarch of the family has a discretion, then HUF obviously does not work. Few years back, and I'll not name that well-known company, but a very interesting case was filed in the Bombay High Court. Some 50 years back, there was a HUF partition. One branch of the family got certain assets. They moved to Singapore. Other branch of the family got a company. That company grew to be an iconic company. 50 years back, it would be worth 100 rupee. Today, it is worth, maybe 50,000 crore, right? The branch of the family which moved overseas, the cousins of those branch of the family said, you know what, our consent was not taken for that division. And obviously, we could not have taken their consent because they were minors. They said, so what? But my consent is not taken. So I'm filing this petition in the Bombay High Court challenging the division which has happened. So there are some interesting angles which are coming to HUF bifurcation, HUF dissolution, etc. So that again is a bit of a challenge. And therefore, if you see, the trend of the day is to create private trusts per se, right? Private trust has its pluses, has its minuses. But obviously, if you really make a comparison between a private trust, a holding company, a will, a HUF, you will basically realize that yes, a private trust has far more flexibilities, a better chance of avoiding an estate duty. While there is no guarantee, it depends on the law. And obviously, you can create a tighter control. What I thought is that while many of you would be well versed with what a trust is, right? It's good to spend 5 minutes on the basics so that when we speak more about it, the basics are clear. First, there is a difference between a public trust and a private trust. While both the trust are governed by the Indian Trust Act, a private trust does not have a regulator. A public trust would have a regulator. It would be governed by the charity commissioner of the respective states. But a private trust is not governed by anybody. That's a very important point. Second, a trust by nature is not a legal person. It's an obligation which a settlor creates on the trustees for the benefit of trust, for the beneficiaries. And let me give an example. Let's say I own this bottle of water. and I proclaim in this crowd that I want to settle this bottle of water for the benefit of all of you. I know only one drop will come to each of you, but for the benefit of all of you. And I want to make Arpit as the trustee, right? By saying this, I've created a trust. It's an oral trust. I have not codified it. If I codified it, it becomes a written trust. In this case, I am the settler, or I am the creator of the trust, who created it. This bottle of water is a trust fund. All of you are beneficiaries, and Arpit becomes a trustee. So these are the different players. After I have created a trust, I as a settler, I have no power, unless I have created provisions in the trust deed for me to come back, right, and regain control, which is very unlikely. Most of the trust deeds are created as irrevocable, and we'll come to the concept. But typically, it is the trustee who will control the trust fund for the benefit of the beneficiary. So really, if you put it in a simple word, a trust is a promise. It's an obligation. It's not a legal entity per se. And therefore, even when you go back to the Income Tax Act and you have Section 2, subsection 31, which outlines the entities involved, the assessees involved, it says individuals, HUFs, firms, companies, artificial juridical person. Nowhere it says trust. When you go to Section 164, 160, 161, 162, those provisions, which talks about representative assessees, the sections does not say that a trust has to be taxed. It says the trustee has to be taxed in a representative capacity on behalf of the beneficiary. So the concept is very clear that the trust is not a person. So whenever a tax law attempts to tax a trust, they are effectively attempting to tax the income which ultimately belongs to the beneficiary. And trustee is like the captain of the ship to kind of make good those compliances per se. So these are the players involved in a trust. There are questions to say that, I have created a trust with a very small amount. Then subsequently, my other family members have contributed or gifted to the trust. Are they also called settlers? In substance, yes. While the Indian Trust Act does not necessarily expressly say that, but anybody who contributes to the trust in substance is a settler per se. Can a person who is a settler also be the trustee, or you need to have separate entities? Answer is no. A person can be a settler, a person can be a trustee. That same settler and trustee can also be the beneficiary, but you cannot have a trust where only this one superhero is there, right? You need an additional beneficiary, otherwise the trust is not valid per se. In practice, you will rarely see a settler becoming a trustee. You will rarely see a settler becoming a beneficiary, and some of these reasons are because of certain income tax provisions and because of the estate duty provisions which were present in the earlier law, and we'll touch upon it a bit later. Can a trustee be a corporate entity? Absolutely. A trustee need not be just a natural person. So you have a trend where instead of an individual becoming a trustee, certain families create what we call a PTC, a private trust company. So under the Companies Act, you can create a company without any share capital. So these are the more popular ways of creating a private trust company. The whole idea behind is that the trustee can die, but a private trust company cannot die. And under the private trust company, you have a board of directors, which you define well, including the succession, who will keep on managing this trust. So internationally, a corporate trustee is very, very common. In India, it is catching up. And incidentally, the law of trust is older than the law of Companies Act. Companies Act, the first act was somewhere in 1920s. Trust Act was 1882. So it's actually an older animal, but obviously it's come back in revival. Many times a question comes to say that, can a non-resident become a trustee from an Indian Trust Act? There are certain FEMA issues, we'll come to it. Answer is yes. There is a provision in the Indian Trust Act which says that if a trustee is outside the country beyond 6 months, then he may be removed as a trustee. So if you have a non-resident trustee, which is generally absent from the place where the trust is created, you have seen the powers being given to the other trustees or the beneficiaries to remove that trustee. So yes, a non-resident trustee can be a trustee, but he needs to be regularly visiting the country where the trust is created. Beneficiary. Can a minor be a beneficiary? Yes. Can somebody with a mental disability be a beneficiary? Yes. Can a trust be a beneficiary in another trust? Very interesting. Answer is yes. Right? You can have a master trust, you can have sub-trusts, and we'll see certain practical structures where for each branch of the family we create what we call a sub-trust. So yes, it is possible for a sub-trust to become a beneficiary, and somebody would say how? Because trust is not a person. Yes, absolutely, and you have to therefore look through the beneficiaries above. Effectively, the beneficiaries above the sub-trust are the beneficiaries in the master trust. The sub-trust is only a representation for those ultimate beneficiaries. Very quickly, the types of trust. If the trust deed specifically defines the share of benefits of every beneficiary, then it's called a specific trust. But it does not define it. It leaves it to the discretion of the trustee. Then it is called a discretionary trust. In most cases, you will see discretionary trusts are far more common because of estate duty and other considerations, right? But it depends what is the final objective. But if you define something which is specific, then you are clearly not planning for an estate duty. Because if you create a specific trust and I as a beneficiary get, let's say, 10%, and tomorrow if I am no longer there, my 10% share in the trust can be measured, can be regarded as part of my estate which has been passed on per se. So that's one of the reasons why specific trusts are not very common if somebody wants to evade a potential future estate duty. What are revocable trust and irrevocable trust? In the example I gave, if I create this bottle and I say I can take this bottle from Arpit anytime, I being a settler, it means that I as a settler, I have kept the power to take back the trust fund which I have created. It means I have created a revocable trust. So I can take it back anytime, and moment you create a revocable trust for tax and estate purpose, generally, that trust is invisible. It is not regarded as being in existence. So you will look through that trust and look at who's the ultimate settler per se. But if you do not have the power to take back what you have contributed, then that trust is irrevocable. You cannot revoke it. Right? So finally, it is up to the trust deed, the trustees, the beneficiaries as to how do they get back the wealth. Many times where you have certain members who are, green card holders, US citizens, we have seen a combination of revocable and irrevocable trust being a better structure to kind of avoid, let's say, an overseas estate duty where the law is already in place. So yes, revocable trust has its own usage, in certain planning. What is a testamentary trust and what is a non-testamentary trust? Very few trusts are created under a will. So you might write a will saying that if I die, then these assets go into a trust. The draft of that trust deed is attached, etc. So the trust is created on death of a person under a will, which is called a testamentary trust. But you can also create a non-testamentary trust. So 98% of the trusts are always created when the person is alive, when the settler is alive. You are not dependent on a particular event per se. So this is the difference. What is an oral trust? We just created an oral trust, right, by saying, etc. Arpit has to be responsible, to manage this bottle. But if I codify it, it's a written trust. So that's how the differences are per se. Now, what happens is that the discretionary trust, which I mentioned is the more common trust, can be designed in a very, very infinite manner. You can come back to say that the shares are discretionary. So when the assets are kind of distributed, the trustees has the discretion to decide whom to distribute what. You can come back to say that a particular asset is discretionary. You can come back to say that a particular income is discretionary. So you can make a trust part discretionary, part specific. But obviously for income tax purpose, moment there is a portion of discretionary element in the trust, this will be regarded as a discretionary trust, which is then subject to the highest MMR rate. But why do you say that people create a hybrid trust? It depends. So sometimes a patriarch would say, this is the trust. Under all circumstances, my wife will be the beneficiary of our heritage house. My son will be the beneficiary of this particular business. My daughter will be beneficiary of this X asset. But certain assets, I would say, no, this is a pooled asset which, the trustees would, in their discretion, decide whom to give what. So you can always have a concept of a hybrid trust, but moment there is a element of discretionary nature. For tax purposes, it will become a discretionary trust, and then it will have its own consequences. So effectively, if you look at it, a trust is nothing but an evolved will. It's a sophisticated will, where you create rules, you create positions, you give powers to the trustees, you create locks for the trustees, you create benefits for the beneficiaries. So it's a white canvas which you will draw, per se. What are the typical benefits of a trust structure? You can segregate control and ownership from the benefits. I have 3 children. I just have one, but let's say I have 3. And only one is capable to run a business. The other 2 are not. Right? But I love everybody equally. So I give power to that one child to run the business, to control the business, to take the decisions, but whatever profits come, it has to be distributed equally. So I have segregated control and I have segregated benefits. You can absolutely do that. Second benefit, clear line of succession. So typically, you will see a trustee clause having a detailed line of succession. Today, I become the trustee along with my spouse. I have the veto powers. After me, my wife gets the veto powers. After that, I don't give the veto powers, let's say, to any of the children. I would say the decision has to be made equally, unanimously, or in a majority. I will decide. So you are creating rules of how decisions would be made in scenario 1, scenario 2, scenario 3, scenario 4. And then, of course, you will leave it to the second or third generation to keep on updating the tree and the authority matrix. So I can come up with a clear line of succession. I have flexibility for future generations. So everybody knows about this Rockefeller Trust in Europe. It's a 900-year-old structure where almost the 11th or 12th generation is now taking benefits. Right? The total number of beneficiary I have been told is now almost 500. They meet once a year, for some vacation. Everybody knows I have a 0.5% share, I have a 0.9% share, but it is that trust deed which has kept them binded, per se. And there is a concept of how the future kids will be funded, their ventures will be supported. If they come up with some new entrepreneurship entity, how will they raise capital? A lot of things are covered in that. And we have seen examples where many of these trusts, which are intergenerational trusts, who want to create legacies for centuries, they will come back to say, every kid will be given an X sum to experiment in a new business. That's it. After that, they have to come back to the investment committee of the trust, take an approval, convince the committee for more funding. So you are absolutely creating the legacy the way you want it, per se. So you can run a trust like a corporate family, per se. And last but not the least, if at all an inheritance tax law comes, you have some chance, there is no guarantee, but you have some chance that this structure might withstand, the new law. And why could it withstand? Because you are creating, hopefully, as a discretionary trust where the shares of none of the members are ascertainable. So if a particular member expires, we do not know whether his share is 0 or 100. So in a way, you will apply the Supreme Court B.C. Srinivas Shetty equivalent to the concept of this discretionary trust. And obviously, we'll see some structure, how you can create a discretionary trust, but still give specific percentage to each branches. How do you achieve both? Because if you do not tell whose share is what, then again, you have not achieved your clarity of interest, per se. So there are some structures, we'll talk about it. I have spoken very quickly on trust versus will, and will is obviously a must, because even if you create a trust, right, not all assets can be shifted to the trust. For instance, somebody would have significant real estate property. If today I shift it to the trust, I have to suffer a stamp duty. Would I pay a stamp duty? If somebody guarantees me that the estate duty is coming tomorrow and the estate duty rate is higher than the stamp duty rate, I will incur that, right? But I do not know. So most of the families are in a if-but scenario. So they transfer movable properties, they transfer their shares, they transfer their treasury, they transfer their jewelry, they transfer their art, but they keep the real estate intact, but they create a will, saying that if I die, this real estate also goes into the trust, and a transfer of real estate under a will, we all know, does not suffer a stamp duty. But if tomorrow there are murmurs, says, you know what, at 12 o'clock there is some announcement happening via ordinance, right? I will go and transfer everything, pay a stamp duty, because a stamp duty will always be cheaper than an estate duty per se. I'll skip certain slides, which are not relevant, considering the time constraint. A trust deed is a very important document, and your trust is as good as a trust you have drafted. Many years back, we had a client owning a very, very reputed listed company, and they wanted their trust to be reviewed. Their trusts were created somewhere in the late 80s, and that trust deed didn't had addition of the third generation, right? It was drafted in a slightly patchy manner. And they mentioned that we want to add the grandkids, but it didn't have the power to add new beneficiaries. It didn't have the power to amend the trust. And there was a lot of confusion. How do you do it? Do you apply the Specific Reliefs Act, go to a local court, get it amended? And finally, the decision, basis certain council opinion, was take consent of all beneficiaries, trustees, change the trust deed. But this was a peaceful family where everybody cooperated, right? What if you had a family where people would not give their unanimous consent, etc.? So a trust deed is as good as it is drafted, and it can be as bad as it is drafted. Sometimes you create deliberate lock. 2 years back, we created a trust for a family. The patriarch said that after my death, my 2 sons cannot separate for 10 years, right? It was an interesting clause. And we asked him, what's the purpose? He said, for 10 years, let them fight each other. If they find a way to work together, great. But they know after 10 years, a divorce is happening. Then they can separate the assets, sell the company. But I want them to try out 10 years. Right or wrong, that was his philosophy. I had a budding entrepreneur who said that I have grown from the roots. I have created a great wealth. I don't want my son to just enjoy, right, and use a silver spoon. So he will get access to the trust only when he is 45. Till 45, he will get a minimal expenditure, and he and his wife and his family need to do what they want to do. After 45, either he will be a successful guy like me, in which case, while he has access to the trust, he would not need it, or he would be a failure, in which case he has access to the trust and the wealth is available, right? But this 15 years, I want him to be in the real world. His own philosophy, right, wrong, absolutely, we can't challenge it. But you can come up with a concept which you want your family to live. There is a very famous family in Surat, we all know, right? They send their sons to work in some unknown cities with some, 100 rupee, 500,000 rupees, something like that. And they want them to experience what it is, to be grounded, to work like normal guys per se. It has its own learning. So people can come up with ideas on how they want to implement it. You typically would have a clear line of succession. There is a lot of permutation. What if this happens? What if this happens? What if this member no longer there's? What if that member no longer there's? You'll have a clear line of beneficiaries. You will envisage scenarios of separation. There are times where, let's say, either a son-in-law or a daughter-in-law, there is a debate whether I should include them in the trust deed or not. And many times they would say, let's do one thing, put a period of marriage. 15 years, 20 years. If they survive 15, 20 years, the marriage is successful. Of course, there is no guarantee. But then you can have the power to include them in the list of beneficiaries. Till then, it's a lock. They create a lock which opens only at a particular time, obviously. So it's absolutely your creativity. It is the wishes of the family, how they wish to create a succession. So that's the most important part. The drafting of the trust deed cannot be a template based. It has to be absolutely bespoke. You also have many families which are overseas. So certain families are here, certain families are overseas. And there is a concept of a multi-territory trust. I create a trust in India, I exactly replicate that in Singapore. I exactly replicate that in US. Your philosophy, your power metrics, your desire has been fixed. The same thing you are replicating in the format of different countries, and now you're putting local assets under that trust. Why would you put the assets of US in an Indian trust, right? Because of FEMA regulations, you can't take it out. Create a US trust, create a Singapore trust, create a whatever, Australian trust, wherever the family is, you put the local assets there. So it's quite common. I'll skip this offshore jurisdiction selection. See, very quickly, from an income tax perspective, maybe 2-3 principles, while there is this chart, but it might be complicated. I'm presuming this copy will be available. As I mentioned, trust is not an assessee. Trustee is a representative assessee. And finally, what is being sought to be taxed is the ultimate beneficiary. So theoretically, if the beneficiary is a company, let's say there is only one beneficiary, which is a company, you'll obviously not do it. Because if you create a trust with a corporate entity and you settle certain property, that's taxable under section 56. Because you can create a trust only with relatives. But let's say the beneficiary is a company. Then the trust will be taxed in the same manner as a corporate entity, the company would have been taxed. So you have to always look at the underlying beneficiary while deciding it. Now in a discretionary trust, because it is impossible sometimes to bifurcate as to which income goes to what, the law has come up with a simple solution. He says, forget it, just apply MMR, apply the highest tax rate. This MMR obviously is subject to special rates. So if a trust sells shares in a listed market, it will pay 10% long-term capital gain. There you will not use MMR. But if the trust is earning an interest income, you will pay tax at MMR without worrying for slab. There is a debate on what is the surcharge to be applied, because your surcharge changes income to income. Anything about 1 crore, anything about 2 crore, anything about 5 crore, your surcharge is different. And that controversy, to be very candid, continues. Do I have to look at the slabs in which my beneficiaries are taxed? The correct view is yes, you have to ultimately look at that. For a certain period of time, when you were filing the income tax return, the system, the software was only taking the income of that particular trust. So let's say you have 3 beneficiaries. All the beneficiaries are subject to the highest rate. 39% today, in those days it was 42%. But the software would say, no, this trust has income of just 1 CR. So I'm not going to apply 39 or 42. But interestingly, when the 143.1 summary assessment came, they applied the highest rate and there was a demand created. So that debate continues as to how would you apply the surcharge. I think a better view seems to be that you have to look at the ultimate slabs of your beneficiary. And if any of the beneficiary today would have paid, let's say 39%, the highest rate, assuming the 100% of the income would be determined, then I think you have no choice but to offer it at the highest rate. You have one Hyderabad tribunal decision which says don't look at the beneficiary slab rates, look at the trust rates, but this debate will continue. But I'm saying you should be aware of that controversy per se. So really, if it's a specific trust, you can apply the slab benefits provided the beneficiaries have not consumed it, but it's very difficult. If it's a discretionary trust, it's directly MMR. If there is a portion of business income, it is MMR. So there are ifs and buts. And for trust with smaller incomes, with beneficiaries which do not have income above the taxable limits, you obviously have separate provisions. But I'm sure those people may not be able to afford creating a trust. So it's a bit academic of talking about that. One very important element, under section 166, the tax officer has the power to directly assess the beneficiary. So he says, 4 beneficiaries, each of them earning 25% of the trust income. I don't want to assess the trust, I will directly go and assess the beneficiary. The mathematical answer cannot change of the total tax being paid. It has to remain the same. The question is that if the trust is a discretionary trust, can the assessing officer still apply this concept? Because how will he know what income is being earned by every beneficiary? And he can know only maybe if there is a year of distribution. The trust is discretionary. In the first year, you have done nothing. In the second year, you have actually distributed that income. The assessment comes that can the tax officer says, I want to directly assess it. I see no advantage to the revenue. But yes, whether the trust is a discretionary trust or a specific trust, considering the Supreme Court principles in Kamalini Khatau, they have the right to directly assess the beneficiary. So that's it. And the only reason, on a lighter note, I would believe is if somebody targets are incomplete, he would say your trust is in jurisdiction Maharashtra, you are in Goa, let me assess it and take the tax in my credit. But in faceless, I believe this also has become irrelevant per se. There is at least one decision I am aware where the tax officer had refused to give the credit of the taxes paid by the trust. He said, let the trust claim a refund and you should pay a separate tax. That's incorrect in my opinion. The taxes paid by the trust are on behalf of the beneficiaries and therefore due credit has to be given. Whenever there is a non-resident trustee or a non-resident beneficiary, the confusion becomes chaos. One, because you do not have any written clarification from Reserve Bank on what is possible, what is not possible. So it is always through murmurs and whispers via authorized dealer banks as to can I do this, can I do that. But over a period of time, certain principles have come up. One principle is that you can have non-resident beneficiaries. You can also have non-resident trustees. But preferably, the majority of the trustees need not be non-resident because then it would be regarded as if though you have transferred assets to non-residents. So the current practice, and there are variations and I'm not getting into it, but the current practice is that if you are able to demonstrate that either an equal number of trustees with certain extra powers or a majority of the trustees are FEMA resident, I think generally the bankers are comfortable about it per se. The other controversy is that when a trust distributes income to its non-resident beneficiaries, can those beneficiaries take out that money out of India? Will it be hit by the LRS limit of $250,000? Can each of the beneficiary take out $1 million? Can the current income earned by the trust absolutely be taken out without any limit? I think there was one tax association which had written to Reserve Bank and Reserve Bank came up with a one-line answer that anything which cannot be done directly, you cannot do it indirectly, right? Which created its own confusion. But this is an example. You have a trust earning a dividend income of, let's say, 50 crore. The trust now distributes it to all three members who are non-resident. The non-resident members have received that money in their NRO account. The non-resident member wants to argue before the bank, you know what, the $1 million limit does not apply because it applies only to capital repatriation. This is a current income because the underlying nature is dividend, so allow me to take out. Some banks allow, some do not. Some allow in first year, they do not allow in second year. It's absolutely a mixed practice. My view, this should be regarded as a current income, freely allowable to the beneficiaries. Let's say somebody wants to gift, a father wants to gift his son and daughter who are situated abroad a sum of 50 crore. He cannot because there is an embargo of LRS. So even if I give to my relative, right, I have to consume my LRS limit, which is paltry $250,000. So what does he do? He creates a trust. He puts in 100 crore in the trust. Now the trust beneficiaries are the son and the daughter. The distribution of capital happens. 50 crore goes to one son, 50 crore goes to the daughter, and then they start taking out $1 million. Is it possible? I think the facts are fishy, right? But has it been done? Has it been allowed? Yes. So you will have facts which will determine what is possible. Because if what you have created is for indirect or direct purpose of obviating the limit of $250,000 LRS, you will see a regulator, sorry, this is not permissible, because you'll have to look at substance over form. So whenever it comes to trust which has non-resident beneficiaries trustees, you will see facts becoming paramount. And when the facts are pretty clear, then I think you are able to achieve some of the repatriation. From a SEBI perspective, and why don't I do one thing? Let's jump to the structure actually, and we'll have some time for Q&A. This is a simple trust. You have one master trust. You have the head of the family and his wife as trustees. And you have both your children and their family as beneficiaries per se. And you have asked one of your relative to become a settler. He settles the trust with, let's say, 1,000 rupee, but you have contributed a major amount of the wealth. Anybody who has some thoughts why you see trust with a third party settler with a smaller amount? right? Because in this case, the promoter also could have become the settler. Why is he making his friend or a relative as a settler who anyhow will only contribute 1,000 rupee? The major wealth will come from the promoter or the patriarch only. Any reason why people do it? I think one of the reason is, sorry. Okay, actually they can be same. The problem is that if the promoter itself is contributing the wealth and he is only becoming the trustee, whether this trust, while from a legal perspective is an irrevocable trust, whether from an income tax perspective, this becomes a revocable trust. Because the definition of a revocable trust under section 60 to 64 has been worded, in my view, in an ambiguous manner. There are some decisions which have certain obiter dicta, right, which says that if you are merely taking decisions on that wealth, it should not be revocable trust, but there is a bit of a gray area. So one of the reasons you see a friend coming and becoming a settler and creating a trust deed and handing over that trust to the promoter and his wife is for the promoter to have an additional argument that the settler is Mr. Z, he is my friend. He does not have any power over the assets under the trust, and therefore this trust should be regarded as irrevocable trust. What I have contributed is as a donor, and when I have contributed, I have not demanded any condition of retaining control. I have contributed it into a trust. I'm not getting into how good or bad this argument is, but this is one of the key reasons why you would see people being cautious and getting a friend, family member as a settler who has no role to play, either as a trustee or as a beneficiary. That's it, right? So I'll pause here and happy to take Q&A. This is structure number 2, where what you do is you create 2 parallel trusts. In one, you can maybe house business assets. In 2, you can house the balance business assets, but you give access to each trust to 2 families. So let's say you have one company, you have one real estate, put 50% in trust 1, put 50% in trust 2. In trust 1, get your branch 1, which is, let's say, son 1 or daughter 1 and family. In trust 2, get your branch 2 as beneficiaries, which is daughter 2 or son 2 and family. And let them have a direct holding, compared to structure 1, where all the beneficiaries were in a single trust. So they had to manage it together. So let's say there is an amount of 500 rupees coming in the master trust. After the promoter and the spouse, it is the 2 families which have to decide together what to do with that, right? But they have to decide together. One way they would say, ek kaam karo, you want to invest in equity, I want to invest in debt, apna matching nahi ho raha hai, so let me withdraw the wealth and let me do what they want. Second option, you create 2 trusts. That 500 anyhow is distributed at 250 in trust 1 and trust 2. Each family decides as per their desire what you want to do. So when you split the trust into parallel trust, you give flexibilities to branches of family in future to decide what they want to do. But the risk of this is each trust holds assets separately. So let's say there is a listed company below. Trust 1 holds 35%, trust 2 holds 35%, together they hold 70%. There is a potential buyer. He goes to trust 1 saying, can I acquire your shares? Trust 1 says, no, I don't want to give you the shares. He goes to trust 2. He says, can I acquire your shares? I'll give you a premium. He says, yes, I'm happy to sell you. Suddenly, he acquires the shares, triggers an open offer, buys from the market, and he's suddenly in a majority, and the shares held by trust 1 is in a minority. There was a very famous listed company into information technology which had 3 brothers, and this is the way how a buyer came. He convinced the 2 brothers. He couldn't convince that one brother was actually running the show, and after the 2 brothers sold, he was forced to sell his stake. So this is a classic case where you will then come back to say, sorry, let it be a single trust where this business is there. You decide together to sell or not to sell. if I give you in two separate trusts, then I'll have to create additional complicated clauses. One trust has to consult another, etc. So you normally would see that when it comes to businesses, especially listed businesses, people avoid creating separate trusts, but if they create separate trusts, they will come up with a family MOU to bind so that one part of the trust does not unilaterally decide to exit compared to another part of the trust per se. This is a third structure where you create a master trust and you have sub-trust above that, and you give basically a space to each of your families. This is like a giant house, and each of the families has a room, and in that room you get your privacy and you do what you want to do. But finally you are living in a master house per se. The problem with this structure is SEBI does not permit it. So you have the SEBI circular. They basically has a wording which says layering is not permitted. Couple of families have tried, SEBI has rejected it. So today, if you have a listed company, you cannot put listed company under a layered structure. But if you have unlisted company, other assets, a trust with a sub-trust probably could be one of the best structure to give flexibility to each families, but to retain control. The reason I was showing certain illustrative structure is that if the family is small, it's a unitary structure, right? You would just go and simply create a single trust. You will not think of much. But if you have branches of family which think differently, you will have to come up with a structure where you keep them together, but do not suffocate them. You will have to give them some space of how they want to spend their wealth per se. And therefore, you will see the structures, the layering would differ from families to families depending on what they really want to do per se. This is another structure which I think is a standard template, where you will put business in one trust and you would put non-business assets in another trust. The reason is when you put business shares and the company is taking a loan, a banker would say, give me a guarantee. So when you segregate these two assets and tomorrow, God forbid, the business goes bust, it is only the assets under trust 1 which is exposed, the assets under trust 2 continues. So in some sense, you have created a bankruptcy protection for trust 2 so that even if business 1 fails, you have some funds available in trust 2 for generations to hopefully revive and survive and maybe thrive once again per se. So the manner in which you create a trust structure is extremely important because you will look at succession, you will look at family dynamics, you will look at who wants to control what. You will also look at what if one part of my business becomes contaminated, how do I protect it, from the other part. Okay. Quickly, we'll just summarize in 5-10 minutes and close this session. It's important that you have to maintain your trust structure, right? And one way we tell a family is that whenever you go on a vacation, please carry a copy of your trust deed, read it, so that if any changes are required, you do it annually, and they laugh, they say, yaar, vacation hai, ye kya kar rahe ho? Then we say, okay, take it once in 2 years, right? But you have to spend time in ensuring your trust deed is updated because your trust was prepared in a particular frame of mind at a particular point, it might need amendment. Today you believe I want to give control to my son. Tomorrow you believe my daughter is more capable than my son. You will change the clause. Today you believe I want to give X percentage to child 1. He suddenly become a billionaire, he does not need that money. You will say, let me support my weaker child. Situations will change and therefore your trust deed is relevant for that point of time. Second, your family ideology is very important. Like I know of many families who says that a trust cannot invest in particular businesses. This is against our principle. It will not invest in non-veg businesses. It will not invest in alcohol. It will not invest in this. It's their philosophy. So they create a bar per se. Certain trust says that at least X percentage of my wealth has to be gifted to charity. So your family ideology becomes important, how you create a trust per se. Second is obviously setting up a family office. You need a good team if it's a very large trust, significant assets to really maintain that. I know of so many billionaires. When I ask them that, can you give me record of your assets? They take a month to compile. They says, 25 saal mein kabhi nahi banaya. आज पता चला अरे इधर भी लैंड है, उधर भी लैंड है, इधर भी प्रॉपर्टी है. It's like when you clean your house, you suddenly realize there is a 10 rupee note lying somewhere in my cupboard. This is how many of the families react to say, "Acha hua you came and we could compile it." So you need absolutely a discipline in maintaining your assets. Sometimes family members don't even know that there is an insurance policy. When my husband dies, somebody has to really tell them per se. So this family office concept is extremely important. Cost considerations become important because the migration is complicated. Sometimes creating a trust structure, creating a thought process, creating a design, creating the power structure is fine. When you migrate, you have tax considerations, you have stamp duty considerations, you have regulatory considerations. It will depend on many of these factors per se. So your migration becomes important. You will come back to say, I'm happy to pay a stamp duty, period. Let this house be protected under a trust. Sometimes if you have listed shares and those shares are prior to the grandfathering date of 31st Jan 2018, right? Then there is an issue that when you transfer the share to a trust, whether that grandfathering continues or not, right? While a better view is the intent is the grandfathering should continue, but if you really look at section 55 2SE, it is not necessarily very well worded. Now, if I have a stock of 10 lakhs, I would say forget it, transfer it. But what if it is 10 crore? What if it's a promoter stake where the value of the stake is 500 crore? Then you are saying, no, wait a minute. If I'm not going to get a transfer of the grandfathering cost, let me think whether I want to transfer it or not. Am I happy taking a council opinion? So your migration could become complicated depending on your facts. I have a US son. He's a green card holder. I migrate to a trust. Today it was all owned by me. So I wasn't worried about an estate duty or a tax in the hands of my son because he's working. Moment I migrate in a trust where he's a beneficiary, the US tax laws and estate laws come into play and there is a concept of a throwback rule. It suddenly becomes more complicated. Therefore you will create hopefully a revocable trust above a master trust to avoid the US. But one day that revocable will become irrevocable. So you will see that if there are foreign citizens, if there are listed companies, if there are real estate, if there are shares prior to the grandfathering debt, you will have to take certain calls in terms of cost and tax positions per se. Let me quickly touch upon 2-3 practical case studies, and then we'll come to the Q&A. I have created a discretionary trust, but after a year, I made it specific. Can I argue that for tax purposes, this is now a specific trust? Right? Answer is no, because it has to be specific on the date of creation. So that specific trust would remain discretionary for eternity for tax purposes. From an indirect transfer perspective, which is Vodafone type scenario, can I use a trust to avoid any kind of an indirect transfer trigger from a section 9? Again, doesn't seem to be. Section 9 is apparently pretty wide enough. Can a trust become a partner in an LLP? I think we get these questions many, many times, right? Because if you look at the LLP law, it says only an individual or a corporate body can become a partner. Can a trust become a partner? Absolutely. It is the trustee which is becoming a partner. The trustee has to be an individual or a corporate body. And the trustee is becoming a partner on behalf of the beneficiary. So this should be possible. This obviously has got compounded due to a circular by the ROC which says an HUF cannot become a partner. I think that circular is incorrect. The Karta is becoming a partner, not an HUF. You have that Supreme Court decision of Rasik Lalel company, right, which explains that concept very fast. But can a trustee on behalf of a trust become a partner? I believe it is possible. And last case study, I'm giving a gift to my nephew or my niece. This is absolutely exempt under section 56. Now I'm creating a trust and putting that sum in that trust for my nephew and my niece. The way section 56 is worded, it is absolutely reverse. This becomes taxable. That's not the intent. So the way section 56 is worded is to say that the nephew and niece, if it creates a trust for his uncle or aunt, it is exempt. Why would any nephew or niece create a trust for his uncle or aunt, right? So I hope one day they clarify or modify. But the wordings today are absolutely put it in a reverse manner. It's a drafting error, but the error is significant. So today, whenever somebody says, I want to create a trust where my brother, his family would be beneficiaries, we says, wait a minute. If your brother has a son or a daughter, then that nephew or niece cannot be part of it. Then you better gift something to the brother, and after some time the brother creates a trust where your nephew and niece becomes a beneficiary. So this is bit of a lacuna, but which is creating significant challenges in terms of sometimes create a family trust with larger relatives. I think that's it. I've just, sorry for being a bit quick, but happy to have any questions if any. Yes. Yes. Is a registration required? Sorry, was there your question? Yes.
Hello.
Friends, please hold on for 2 minutes. We'll take some questions and then, the well-deserved vote of thanks. Please respect the time which has been put in by the speakers. So few questions we will take and then the VOT.
I think if all of you agree, all of us are here. Our earlier speaker is also here. So if there are other questions also you want to take, maybe we will request Vimal sir if you also can join us. I think we can have a joint question answer session. Since you all are agreeing to be here for some time, we can take the best out of both the speakers. Please put your hands together for both the speakers. Sir.
Hello.
Yes.
Sir, in a discretionary trust, having a single beneficiary, single primary beneficiary, can this be treated as specific trust?
So yes, if it's a single primary beneficiary, effectively you have only one trust, right?
One
so
beneficiary.
One beneficiary. So the shares of that beneficiary are determined. So from a income tax perspective, the shares are determined. So it is a specific trust, but there is a danger. Under the Indian Trust Act or the law, this becomes a bare trust. So when you have only one beneficiary, you have a possibility of that single beneficiary saying that I demand the distribution of the asset. So people never create unless they trust that primary beneficiary a lot.
Primary beneficiary is a spouse, and then there are daughters who are secondary beneficiaries. Can this be possible?
It is possible. It has been created per se.
Okay. And
But practically whether it is a specific or discretionary, the only debate is of the slabs. Which means
Yes.
if your wealth is significant, you wouldn't worry about slabs first.
Okay, sir. Thank you. And the second question is, discretionary trust distribute to the beneficiaries, and then beneficiaries transferring the same funds to the settlers. Can this be possible?
This is possible. Yeah, that's fine.
There is no
because
issue
once
with
the
the income
distribution
tax.
happens to the beneficiary, it is their income, right? They decide what they want to do. They
can
want to
give
gift it to
back
the settler.
and settler can put back to trust.
But why would you do that then?
No, it is a practical issue.
Yeah. Okay, if you want
They
to do
need
it,
some money for the time being, so they are
Okay.
distributing to beneficiaries, and then beneficiaries are giving to spouse.
yes. So legally, yes. But if it is seen that the manner in which the funds have been circulated, effectively the contributor of that fund was the particular beneficiary only. Then you have a estate duty challenge, because in the erstwhile Estate Duty Act, you had a section 10, which says that if the donor is contributing something in a trust where he is even part beneficiary, then this trust is not protected from estate duty.
Understood.
So from an income tax, I don't see any adverse implication, whichever way you look at it. But if you're planning for an estate duty protection, the rotation cannot happen like I gifted today and the settler is gifting tomorrow.
Okay. So last question.
Yes.
Discretionary trust having a surcharge of 37%, is it compulsory for MMR?
Any answer is today, that's how the view is being taken.
Because under 143(1), they are putting 37 on all income, escape for specific income tax.
Yes. Answer is yes, this is happening. So to that extent, yes, there is a bit of a onerous thing. But see, look at the concept of taxation. A trust has to be taxed in the same and like manner as a beneficiary. So my point is, juxtapose this income in the books of your beneficiaries. Are you subject to tax at 37 in their hands?
No.
Then you can fight it out, definitely.
Okay.
And the manner in which we many times do it is that if the income comes to a trust, where you have a notice of 37, you will subsequently distribute it, demonstrate that while it's a discretionary trust, there is a clear trail that the income of this year, let's say 100 rupee, went 30, 20, 10, 40, whatever, right? And now look at the respective surcharges of this beneficiary, the trust cannot exceed that. So you obviously can file a 154 parallel or CIT appeal because the concept under taxation that ultimately you are taxing the beneficiary cannot go away.
Okay, thank you so much.
Thank you.
The individual who is the beneficiary in the trust, the individual has taxation liability or insolvency. To what extent it is ring-faced with vis-a-vis their interest in the family trust?
That's a very good question. In fact, I missed telling you that. So what happens, the beneficial interest in a trust is actually a transferable asset. So most of the trust deeds are drafted to say that the beneficiary has no right to transfer his or her beneficial interest to anybody unless the trustees agree. What it means is that if tomorrow creditors were to chase that particular beneficiary, right, they cannot force the beneficiary to part away with the beneficial interest. So it's absolutely possible to ring fence the assets of the trust with the individual liability of the beneficiary. The key is the drafting. The trust should specifically say that the beneficial interest is not transferable. Sir is asking what if the demand against the settler? Same concept. The settler obviously has no access to the trust. And if the settler for any reason is also a beneficiary, the same concept, that his beneficial interest cannot be touched by the creditor. You also have, interestingly, sometimes clauses put in, which says that if a beneficiary goes insolvent, his beneficial interest can be extinguished. If you're especially creating a bankruptcy vehicle, you will create certain special clauses. But the minimum you can do is ensure the creditors don't touch the beneficial interest, which means the creditors theoretically will be waiting for some distribution to happen. But if it's a discretionary trust, obviously you will not distribute to that beneficiary, where the creditors are waiting at the door. Yes. Yes. Yes.
For example, I am expecting demand from income tax, 5 crore rupee. And before demand comes, I transfer all asset to my family member by trust or this or that. Then whether creditor can attach that property, which I transferred before the attachment.
So the trust has to be created for a lawful purpose, which means that if I create a trust, transfer all the assets, and let's say in 6 months a big liability comes on me, I think the creditors would have a very good case to say this trust is created for unlawful purpose. So the general concept is that you cannot create a bankruptcy vehicle when your house is on fire. And it will delay the consequence, but ultimately the creditors will look through the trust. So older the trust, it is more arguable to say that I could not have foreseen my bankruptcy 5 years before something. Yes, yes.
My question is in continuation of that single beneficiary trust, is it possible for the beneficiary to transfer his own assets to the trust? Because I think due to weird definition under 56, a person is not his own relative. That's what view is taken by some of the councils, that you can't really put your own asset in that trust. So what is your take?
Your point is, I am the settler or whatever, I am the donor. I am putting it into a trust where I am also a beneficiary.
Or maybe both are different persons. And settler, beneficiary is his own interest, which also he wants to put in that trust.
Right. And you are saying, can section 56 be triggered?
Yeah,
My view answer is no, because see, trust is not a person. So even where section 56 says this will be taxable, ultimately you have to tax the underlying beneficiary. So you are actually taxing me only. So my opinion is that if therefore the beneficiary and the donors are the same, can section 56 be triggered? I don't think that should be the case.
Would the answer change if there are more than one beneficiary?
No, it should not.
And one more corollary is that single beneficiary is supposed to be taxed as an individual in the hands of the beneficiary. So whether, just to confirm, whether all the benefits in the case of capital gains like say 54F can be availed?
Answer is yes, right? The question would be, how would you apply it?
Yes.
And we can have one more hour of session to debate this, because let's say you are applying 54F, there are restrictions on the number of houses you own.
Yeah.
would you look at the trustee house, beneficiary one house, beneficiary two house? But in concept, all the benefits available to an individual, because the trust will also be assessed as an individual, should be available. Right? The complex is, see, if let's say none of them has any house, trust has earned something and it has reinvested, you would arguably say yes, this is possible.
It's possible.
Right? But the facts are rarely in real life so simple.
Yeah.
Sure.
Thank you so much.
Yes, ma'am.
Yeah. So first question is for Vishal, sir. So if SEBI has this circular which puts restrictions on transfer of listed shares to a trust, now what if a company which is pipeline of an IPO decides to put the shares in the trust, create a sub-trust structure, have trustees who are non-corporate trustees? When you go for listing, does SEBI interfere with that trust or it accepts it as it is?
So answer is, number one, you can do it, right? Because when you created a layered sub-trust structure, SEBI laws, that circular was not applicable. When you go for an IPO filing, I think it's perfectly fine. Like recently we are doing one filing, we have received a query from SEBI saying, why is this layering happening? And we have given a response saying that it happened before you were our regulator, like in a nicer way. You know how regulate, you don't, so it's not a regulation problem, it's a regulator problem, right? So it becomes a personality issue, with whom are you dealing? But legally it's absolutely possible, and that's what I would say people have done it also in the past. See, they will not enforce, but they will say, aapka file pada hai, you are in a hurry to raise money. So it's a indirect coercion. The promoter will say, jaane do sub-trust structure, mere ko paisa raise karna hai, right? So, and the most important merchant banker will say, mere ko mera fees chahiye, aap please jara isko khatam kariye. So you will see different dynamics coming in. So moment a SEBI, okay, just to say, moment a SEBI raises, and you're not able to convince that SEBI officer in a single meeting, in practice, you will say everybody saying, forget it, just demolish it, right? But okay, has SEBI accepted it? I don't know whether SEBI has accepted it, but they have definitely not raised this issue in the past. No, there are precedents where we filed, there was a layered structure and SEBI said it's fine. And they did not, they accepted it, but like they did not.
We've got one
give
more.
an
I
express,
have one
okay.
query for Punamya, sir, if you don't mind. Sir, we have an appeal where the remand proceedings, the matter was remanded. We have already completed all the submissions around 8 years back. Till date, the remand order has not been passed. Then everything shifted to faceless. Now, what is the solution? We have been putting requests online that please pass the order, but there is no reaction.
You just assume that remand is not asked, reply all the details to the CITP normal course, paper book and submission, and CITP will consider. Delay is there, of course. That if you don't file, they pass order immediately ex parte. If you file, they don't do anything. So that is a big problem for all over India. So let us, some solution will come. Now Modi ji come, he will do something.
We've got one question. Yes.
My question is for Vishal, sir. So basically, in case of a trust which is coming into force on account of a will, now at the time of creation of the will and execution of the trust, at that time all the beneficiaries and the trustees were all residents. But at the time of dissolution of the trust, because as per the will, it was supposed to be dissolved after 18 years of the date of creation. So at the time of dissolution of the trust, all the beneficiaries and the trustees, except one trustee who's a resident, all of them are non-residents. So in this case, are any kind of FEMA formalities or RBI approval required?
No, not really. In fact, even if you, so okay, what used to happen in the past, we used to write to RBI saying that there is a non-resident beneficiary trustee, and they used to write a one-line answer that we have no problem, but when you actually remit money, please come to us. Today, that particular power also has been taken away, and the way they respond saying that we have no jurisdiction over this, you write to the government, right? And what it means is that you will practically deal with the authorized bankers who have become like the quasi-regulator per se. Okay. So in your case, I don't foresee, because when the trust gets dissolved, the assets will devolve to each of the beneficiary, and even if the beneficiaries are non-resident, the assets will stay in India. Some will come in the NRO account, some will be held in demat accounts, and then your repatriation will be dealt with by the $1 million rule, right? Which means $1 million every year. So I see no issue. This is not uncommon.
Okay, so basically no regulatory approval from the RBI will be required.
The problem is, even if you want a regulatory approval, nobody will give you. But people have done it under automatic route by convincing the banker. And see, the concept is that when I am a beneficiary and I am getting something, and the trust is dissolved, these assets come to me by working out of my rights as a beneficiary. So effectively, it's like a shareholder where a company is getting liquidated, where certain assets are distributed, right? So I should not be in any different position as that.
Thank you, sir.
Sure. Any more questions? Okay, we've got.
Any answer is no. He cannot demand it unless he is the sole beneficiary. If he's the sole beneficiary, there are certain provisions. We call it as a bare trust with a single beneficiary. But otherwise, he cannot demand it. And also, it is better to draft it in the trust deed. But if the trust deed is also silent, the law is he cannot demand anything. So, a well-drafted trust deed would also have a clause which says how the trust will be dissolved. So it can be dissolved with the consent, unanimous consent of all trustees. So whenever a trust deed is drafted, we necessarily will have a kill clause in that. Yeah. Because what if the law comes, right? Let's say an estate law is coming and you believe this trust is not good, I better create a better trust. I think you'll have to dissolve it, kill it, and then shift the money in a trust. So good to have a kill clause in a trust, yeah.
In the event of a death of a beneficiary of a specific trust, what happens to his share?
So it is typically envisaged in the trust deed. In most trust deeds, it is written that the beneficial interest cannot be transferred, which means his beneficial interest is not automatically devolved on his successor. So then the beneficiary addition will happen as per the succession list you have created. If let's say the trust deed is silent, then that beneficial interest should become a part of the asset, which is something which can be passed on to the successors. But barring few trust deeds, I have seen most of the trust deeds debarring the transfer of beneficial interest. So it means it's no longer part of his succession assets.
Sir, please touch upon Section 64 clubbing provisions with reference to the beneficiary being a spouse or a minor child.
Sorry, can you repeat?
Sir, please touch upon Section 64 implication with reference to the beneficiary being a spouse or a minor child of the trustee or the settler.
Yeah, that's a very, very good question. I think the question is clubbing. So let's say I create a discretionary trust and I also have my spouse as a beneficiary. Section 64 says that any asset transferred directly or indirectly for the benefit of my spouse, that is something which will continue to be taxed in the hands of the husband per se. In that case, what happens when the discretionary trust transfers any income to the spouse, that income is something which gets clubbed. But in practice, what happens is that, let's say I have put in 1,000 rupee, just to give an example. That 1,000 rupee has now been invested in another asset, which is a fixed deposit. Now the fixed deposit is earning an interest income. The deeming fiction is killed by creating a layer. I don't know whether I was able to articulate. But if let's say that 1,000 rupees lying in the bank account, which is earning interest, which is then being given to the spouse, then you have the clubbing provision which is getting triggered per se. Right? So your clubbing provision is absolutely right. It is absolutely apt. And if you are therefore transferring FDs, shares, etc., where that income is ultimately distributed to the spouse, you do have a Section 64 risk. The question would be that could it lead to a double taxation? Answer is no. And you'll have to obviously figure out, will the settler pay, will the trust pay, will the spouse pay? But thank God the laws are so complicated so that we are relevant.
We've got one question there. Yeah, one more, just last. Yeah. Yes, sir.
Hi, my question is for Vishal, sir. My question is, would it be possible to transfer the registered ownership of shares to a trust, wherein the transferor retains the beneficial ownership, and assuming there are 4 or 5 transferors?
So what you're saying is that when you say the transferor retains the ownership of the shares, but the dividends are transferred.
The registered ownership, as in the share or the shareholders register, the trust's name will appear as a registered owner of the shares. So would that be something that is possible or legal under the trust?
Yeah. Because see, you'll have to file a form giving the beneficial ownership details, But this is how you will do it, right? The name of the trust will come. Actually, it is trustees held on behalf of so-and-so trust. That's a more correct terminology. And the beneficial ownership rules, disclosure norms will apply. I think earlier it used to be Form 187 or 87C. I don't remember now. But there is a form which you have to
MJT
file.
456.
Yes.
Only last question here, and yes.
You mentioned about private family trustee companies. Are they subject to any compliances or regulation, or do they need to get registered with any authorities?
No,
or
they are only governed under the Companies Act, right?
Okay.
So the only regulator will be an ROC. There is no other regulator per se. Neither SEBI or nothing of that sort. So they will be run as a company. You can create a PTC as a company with share capital, or you can create it without share capital.
Acha.
I think the latter has certain more
without
structural
share capital,
advantages.
some of the companies have adopted that. And in this example of clubbing you mentioned, would the facts change? I mean, if beneficiaries are spouse or minor children, and the trust is a discretionary trust which gets anyway taxed as a maximum marginal rate. So clubbing will not impact, or does it have some impact?
See, there I'll tell you the practical challenge. Let's say the trust is discretionary. The trust has earned 100 rupee, whatever. The clubbing provision of the spouse, right, let's say, is difficult to determine what is the quantum, right? Unless you say that in any case the minor's income is also to be taxed in the hands of the settler and all that. But it's very difficult to determine. So the trust will go ahead and make the payment of the taxes.
Yes.
Now next year or year thereafter, there is a distribution. So you know that the income earned in year 1 is now ultimately distributed to 3. So you exactly know that this income belongs to now the spouse, where the clubbing should have got triggered. The practical problem is that the trust then has to file a revised return, claim that as a refund. The spouse will say, okay, my income gets clubbed in the hands of the husband, who's the settler. You have that fiction possible, I would say, under law, right? In practice, nobody would bother. Nobody would keep track of the subsequent distribution. But if you really look at certain observations of Supreme Court in Kamalini Khatau, right, the subsequent distribution creates a fiction where it gives the power to the assessing officer to apply 166. So while the trust has paid the tax, it can go back to the spouse to say, you know what, I want to assess this particular income in your hand. Now, in a scenario where clubbing was not possible, spouse would have given a simple answer. My tax is paid by my trust on my behalf, so that's it, matter over. But where clubbing gets over and he goes back to the settler saying that this income should have been clubbed in your hands. This income should have been clubbed in your hands. I think then you have a theoretical answer to say that the husband should now pay the tax and the trust should claim a refund. I won't be surprised if, I think, I don't know what is your view. The courts will say, yaar, chalega yaar, there is no loss of revenue. See, I do see courts taking a more broader view in this case, right? Saying that the one-to-one nexus is broken. See, I'm saying they'll find the answer and they'll then find a reason to give that answer. So I do think that you will be able to defend it.
But in distribution of income, if the asset itself is distributed to the spouse, then it is a clear-cut case of a clubbing, or there is different view is possible to argue.
But then also look at it differently. You have one more argument that if those assets are distributed after a couple of years, right, then you have a good argument to say that I never intended my assets to be given to my spouse.
Yes.
The intent was to create a family trust.
Family trust,
So it was never that the assets were supposed to be transferred directly or indirectly. Subsequently, after a few years, a decision was taken, right? So you will interpret Section 64 in a very, very strict manner because it's a deeming fiction. And you will say that the test, that the intent was to transfer to my wife is failed because the distribution has happened after many years. And therefore, now you can't apply clubbing. I think that argument also might have to be developed. Per se. But if you, let's say, distribute it immediately in 6 months, right?
Yeah,
it will be
it is
seen
obvious.
through. Yes, it's obvious. Yes. So I think the answer is older the trust, it is like a wine, It's more stronger, more simpler. That's how you will,
Great.
achieve it.
I think
Thank you so much.
an excellent round of questions. Definitely, let's take a moment to have a big round of applause for Vishal Gada sir, and we also have Vimal sir on stage. I think the beauty of your session was, being a teacher myself, I can so understand the way you explained with examples when the session started, and I being not from a tax background, I could understand the tax as well. So thank you so much for that. Just an important announcement. We've exchanged the session of Bhavar sir, which is going to be happening next Friday, and tomorrow Nihar sir's session. So Nihar sir's session would be happening on the next Friday, and tomorrow we have HNI tax by Bhavar Buvarana and 5643BH by Gautam Naik sir. We'll be starting sharp at 2 o'clock. Also, the photos of all the days of DTRC would be available on this scanner. We've got an AI technology used at WRC. So if you scan this scanner, you will find only your pictures and you will not get anybody else's pictures. So of course you can scan these so that you can get your photos as well. Also, the PPT of all the sessions would be available after the entire DTRC is done, would be available on the WRC website in the resources section. So you can get all the presentations as well from there. Let's have a big round of applause for today's day, and let me also thank Ketan sir and Arpit bhai for this amazing time. Thank you so much everyone for a warm listening. Thank you.